Okay, hello everyone. Yeah, let us understand whether we are live or not, whether the PPT is visible or not. Let me confirm it for once. I hope we are live. So how are you all? I hope you have seen the yesterday's video also, in which we have covered one very interesting standard, which is IFRS 15. So yeah, let me just confirm it for once. Give me 1 minute, students. Just a minute. Yeah, so students, yes, we are live. So, in the yesterday's class, I have explained you in the first revision series that we are going to go ahead with some important standards, right? So, the first important standard which I felt was IFRS 15. Up next, we know, like we have a word like ma'am. IFRS 16 is something people would find some tricky things in leases. But for sure, this revision video is going to help you very quickly. We'll be able to manage a lot of questions. So yes students, in my today's agenda over here is to complete the standard, and along with that a lot of questions which we have covered it from the ACCA study resources. Yes students, we have covered a lot of standards from the ACCA study resources. So yes, without any further delay, let us begin. Okay. So yeah, what are we going to understand in this standard? That is accounting for leases. Okay, with the word itself, we know it is talking about certain leases, right? So first of all, what is lease? For example, if I don't have so much of money, okay, to buy one asset, definitely what I can do is I can lease the asset. Lease means definitely I can take the asset not on the purchase basis but on the rental basis. Yes, so that is the meaning of lease. So there will be some other person who will be having the owner of the asset, yeah, who will be the owner of the asset. There will be some other party who will be taking the asset on rent, right? So this time I'll not be going on telling you rent. We'll be better considering it as a lease. Okay, so I'll just write you the concepts, you'll get to know. Okay, when I talk to you about leases now students, first over here there are two parties involved, yeah. For the first, when I talk to you about leases, it is something like I don't have money today, but I want asset, and that is for sure. I want asset to be used for my business purpose in some or the other way. Take care. I want to use it for that purpose. But if I don't have money, but if I want asset, then I can take it on lease. That is basically on rentals. Okay. So every time when I am purchasing or I am taking up the things on rent, should I apply this standard? So not always. We have a exceptions which says accounting for leases, that is IFRS 16, is not applicable on each and every lease. No, there are some exceptions. But before going into exceptions, let us understand who are the two parties involved. For the first instance over here, party 1, there is first person, person 1 and person 2. Okay, if person 1 is having, let's say this is my machinery. Okay, this is my machinery. I know it's very weird, but yeah, if this is my machinery and he is owning the machinery, okay, and P2 is a person who wants the machinery, but actually because of less of financial this, he is unable to purchase that asset. Okay, so what he'll come up? He'll come up with P1 as a person 1 and he'll say, okay, see now please, I want the asset, so can you please give me the asset? So he'll say, yeah, definitely I'll give you, because maybe P1 is actually not in the position that he want to use it. Like P1 has the machine but he don't want to use it right now, for sure. Okay, P1 has the machine but he don't want to use it. So what he'll do, he'll give this machinery to him and P2 will give him the money. Okay, he'll give money. Cool. So who is known as lessor and who is known as lessee? I know everybody knows that. The owner of the asset is known as the lessor, and over here the one who gives money is known as the lessee. Okay, then what is the meaning of lease? For anything, if I want to enter into IFRS 16, I need to know whether it is under the concept of lease, means whether the lease has started whether it is basically a part of lease. So before going ahead, I need to know, I am obliged to know the meaning of lease. Yes, the first and the foremost thing which I need to know is the meaning of lease. So what is the meaning of lease? Yes. So yes, students, with the background of lease, let us begin to understand the first and the foremost concept of lease. Yes, students, we have a lot of beautiful questions. So again, if I tell you that I want some asset, and for that if I have to pay the money, okay, that is lease. Now, when you were very small, definitely in the schoolings I would have understood, like, okay ma'am, there are two types of lease. One is operating lease, one is finance lease. But like this stuff is not there. It's there, but not in so much for the lessee's part. But yeah, for the lessor's part, the operating lease and finance lease, both are the concepts which are there in the course. Okay, which are there in the course. Over here, when I talk to you about the lease, over here, just try to understand whether this concept is known as a lease or not. Okay. For example, if I want a house property, okay, but I don't have money and I want the house property on rent. So I came up to the owner and I told him, okay, see, I want a house property and it's your property where you don't stay, like if you don't want, can you please give me it on rental basis? Maybe he'll say, yeah, you can take it, but on a note that you have to pay rentals in every month. It's okay. We'll take it. For sure, we'll take it. But what can I book? Being a lessee, see, when I'm talking to you about IFRS 16, consider ourselves right now from the perspective of lessee. Okay, if I'm the lessee, if I'm taking up on lease for me, definitely I have to think, acha, if I'm having the asset, I can use it when I want. I can stay it at my property whenever I want. I can not stay it. I can use it like on my own. I can take whatever decisions I want to do. I want to do whatever. It is another way that if it is given in the clause of the lease agreement that you cannot put a nail, you cannot start a commercial thing over there, etc. etc. That is all okay. But to use the assets, if the lessee is having the right to use the asset, then it is known as the right of use of the asset. I know guys, you all know the concept, so I'm not going into very much detail, but okay, that is something which is known as right of use of the asset. But if I told you, I am the lessee, I came up to you guys and I told you, okay, there's a building of 10 storage. I told you I want one office, right? Office commercial property. So I told, okay, I'll give you any office. I told you, no, any office, no, I want one single office. So all the offices are different. Some are different in the square foot, some are different in the square area, etc. etc. So is it a lease, proper lease? If the lessor told me, I'll give you any property. No, it's not a lease. Why? For being a lease, the asset or whatever you are entering into the transaction that you want, guys, needs to be an identified asset. So what's the meaning of identified asset? So yeah, I'm just breaking down the words which becomes very relevant for you all. Yeah, just try to understand it, okay? When I talk to you about the leases, the meaning of lease. Now the meaning of lease, first it is, there should be any which ways the contract between two parties. Yeah, so who are the two parties? Yeah, obviously we know, ma'am, it's the lessor, the one who is the owner of the asset, means he's having the title, he's having the ownership of the asset, and another party is known as the lessee, who is actually using the asset, plus getting all the economic benefits. Okay, what's this? I know people will get confused with the word economic benefits. For example, what if I say you, okay, I'll not make up that way. I think you can see it. I'm not coming in between, maybe. Yeah, I'll just be aside. Yeah, cool. Students, for example, if it's a machine, okay, if it's a machine, over here, if it's a machine which the lessor has, and that is something which the business, for the business purpose, lessee wants. So lessee can take it. And if lessee is taking it and utilizing the machine for its own commercial purpose, what will lessee do? Whatever lessee is earning by using the machine Will lessee give its earnings to the lessor? No, no, no. All the economic benefits lies with the lessee itself. Cool? Yeah, so that's the meaning of that. Cool? And I think like you guys are getting it. Okay. Up next, yeah, this is the first point. It should be a contract between parties. Another point, guys, whatever the asset we are entering into, it needs to be an identifiable asset. Yes, it needs to be an identifiable asset. For example, I told, yeah, 10 floor is building, ma'am, or 10 floor is the commercial property. I'll give you anything, any of. No, any of them will not work. It needs to be precise. Acha, floor number third, property number or office number 4, 3.04, 3. Etc. It needs to be precise in all terms. It needs to be precise, so that it is not as such a situation like whenever the lessee wants, he can come up, or whenever the lessor wants, he can come up and take up my asset. For example, what is this, ma'am? Yeah. The third point is the lessor should not have a substitution right. Hey, what's this, guys? What's this? He should not have a substitution right. Means, for example, if the lessor wants the asset, okay, if the lessor wants the asset, like if the lessor has given the asset first of all to lessee, and if lessor wants it back, he cannot come up and take the asset and give me another asset. No, it's not allowed. If it is pre-written in the contract that okay, for this and this period, the lessee will be using the asset, having the right to control the asset, then the lessor cannot come up and take up the asset and give me another asset. No, man, it's not allowed. Yeah, unless until there is a situation that the lessee who is using the asset and the asset's condition is very bad, like there needs some repairs in machines, etc., repairings. So maybe for time being, the lessor has come up, has taken up the asset, he went up with the asset, he gave another asset and he repaired that asset and gave it again. That means the lessor cannot come and take the asset and on whenever he wants. No. So even the substitution right, substitution means instead of this, if I'm giving another thing, so substitution right should also be not there with the lessor, okay, unless until some damages or some concerns are there, that's all. So yeah, students, with these we can go ahead with the first concept of lease. So let us understand first of all what's the definition of lease, then I'll be going ahead with the accounting of leases. Okay, so yeah, without any further delay, yeah, we can just start it. And I think yeah, the PPT is clearly visible to you all. Yeah, okay, I have made it something smaller so that each and every word can be visible clearly. An entity of, as per IFRS 16, basically an entity must identify that whether the contract, so I told you it needs to be in the contractual form, a contract which contains the lease in which it conveys, the contract conveys that the right to control the use. What's it? So basically I called it as ROU asset. So what is ROU? First of all, before I go ahead with ROU asset, it's a right to use, right to control. Means where I want to use the machinery, when I want to use the machinery, and how I want to use the machinery. If all the decisions are taken up by the lessee after taking up the asset on lease, then it is basically the right of the use of whose asses, basically the lessees. Okay, so basically the lessee should have what after entering into the lease, it should have right of use of any asset, Okay, go it very slow, I'm trying to make it easy. Of an identified asset. Identified asset means okay, that asset is something which is separate, which is distinct, and I can identify okay which asset they are talking about. Yeah, it should be clear. And okay, we'll enter into the contract, but we will not write the time period. No, it's not allowed. You have to write it's 2 years or 5 years or 10 years or whatever. So for a particular period of time in exchange of what money. It's all something again in the charity. Yeah. So that is the meaning of lease. And the right to control over here, the right to control the use of the asset depends upon these two factors. That is the right to obtain substantially all. I told you now who is going to have the benefits. So lessee is going to have all the economic benefits arise from the identified asset, plus he is having the right like how I want to use it and when I want to use it. The right to direct the use of the asset will arise when the customer has a right, that is customer means my lessee. Okay, when my lessee has a right to direct how I want to use, for what purpose I want to use, or all the relevant decision about that asset is also being taken up by whom? By the lessee. Now this is important. This is important. Even if the asset is specified, we have to consider that. We have to consider that over here. Okay, this data maybe will be not so much of visible, but that's cool. Okay, I'll be taking up with one example. But over here now, students, the lessee is not able. The lessee is not having in the position that okay, whenever he wants up the lessee, he'll utilize the asset. Okay, he'll be utilizing properly without any mistake. Yeah, he'll be properly utilizing. But lessor, if he wishes, he comes up and he takes up my asset. Please don't do like this. Is it there in the contract? Is it written that you can come up and take up the contract? You can take up the assets? No, it's not written. Then why are you coming and taking up the asset? Right? With these background, students, I would try to explain you one question. Give me 1 minute. I have already prepared it for us. This is, yeah, I told you this is basically from our course, which is there in our, yeah, so which is there in our material, the ACCA resources. I have taken up some questions from there only. So yeah, without any further delay, we'll be doing that also. Just give me a minute. So I'll be doing on and on. So yeah, the concepts will be clear, and along with that, we'll be doing the questions also. I'm just trying to open it. Yeah, let's give me a second, students. Thank you for your wait. I hope it's clearly visible. Maybe I'm coming up in the middle or what? Is it so? No, no? I think it's visible. Yeah, just let me confirm it now once, because it needs to be confirmed prior. Yeah. Yeah, I think it's visible. Yeah. Because I have promised my students, yeah, my live students, that I'm going to take up all the, like most of the less questions that I'm going to do it. Yeah, so students, without yeah, as I have promised, yeah, definitely, yeah, it's visible, it's visible. Cool. Okay, my students, just for you all. Yeah, and yeah, it's not just the one who have enrolled with me, obviously it's for everyone, because it's open. Yeah, thank you. Yeah, chalo, we'll start, huh, without any further delay. Okay, now I am supposed to understand identifying over here, identifying a lease. So is it a lease or it's not a lease? So students, please try to understand it. Please try to understand it. Okay. Okay, I'll be maybe not able to write something over here, but that is not an issue. Cool. It's not an issue. Okay, just give me 1 more minute, students. Just a minute. So basically I'm trying to share one PDF. If that is clearly visible, yeah, we can move for that also. Yeah, let me just open it, guys, for you all. Yeah. No, I don't want to, like, full screen mode. I'll do it. Maybe if it's visible. Yeah, it's very small, isn't it? Yeah. So I think it's clear. Yeah, we can just read it for once. Yeah, actual size. I'll fit to width. Maybe. Yeah. Yeah, it's big, but cool. It's visible. Okay. So let us understand what is identifying, so that I can write it. Okay. So we have to do what? Identifying the lease. That is there basically from question 1, which we are going to understand it, and it's there in your ACCA study resources. So there is a person, the Gerbrin has entered into a contract to obtain the use of 10 trucks for a period of 6 years. So basically he is having 10 trucks for a period of 6 years. The truck will be used to transport goods across the Europe. Okay, so basically it will be used across the Europe. However, they may not be driven outside from the Europe. Okay, so basically there is a person who has entered into contract to obtain the use of 10 trucks for 6 years. So it's written in the contract that it is basically 10 trucks for 6 years, and these will be used to transport the goods across Europe, not beyond Europe. Okay, so there are certain protective rights. So this is what I wanted to tell you. So we don't have the substitution right. No, the lessor does not have the substitution right, but yeah, there is some protective right. Okay, Baba, you cannot go so when, so where, so when, etc, etc. Okay, cool. When not in this use, means for example, if the Gerbin is not using the trucks, it will be kept at the premises only. And if the trucks are damaged or require maintenance, they need to be sent back to the supplier for repair and the temporary replacement also. Cool, easy. Now please read the word carefully. The contract also provides that for the renting of the additional trailers. This is about the trucks. For trucks I feel okay, it is something like lease agreement. Means the Gerbin is having basically the power to use the asset, to control the asset, and yeah, it's having basically like all the rights associated with the assets. But when I go ahead with another contract about the trailers, if I want, it has been taken on the ad hoc basis. Ma'am, ad hoc basis, it's not allowed. You're like, what? Why ad hoc basis? Why ad hoc basis? Ad hoc basis won't work there. Then these trailers will be kept by the supplier. Oh. We want these trailers also to be in the control of the lessee. Only then it will be a lease transaction. Otherwise, it will not be a lease transaction. Isn't it simple? Yes. So they have given, discuss whether the Gerbin has entered into leasing the contract for trucks and trailer. So yeah, if it's basically for truck, I am clear that yeah, for truck na baba, it is what? For truck it is a lease, because all the rights related to that the lessee is having. But if it is for trailer, no. If I am not using it, I have to submit it there. Arey baba, then it is not a lease. So the contract for renting 10 trucks is a lease, as it conveys the right to the Gerbin to control the use of the identified trucks, that are basically 10 trucks. Yeah, and over here the person is having the control of the use of the trucks, and it's not affected by the requirements that the trucks do not leave Europe, because it is not a substitution right, it's just a protective right, and protective rights are allowed, guys. Protective rights are allowed, but not the substitution right, since a person can obtain substantially all the economic benefits, and even they don't have to keep towards a supplier. Only when there is a repairs they are going to send it. So yeah, cool, that does not make it a substitution right. Till here it's clear. Yeah, about the trucks. But guys, what about the trailers? Arey ma'am, trailers now, it's not something like an thing, because we have to keep it there, we have to submit it there, ma'am. That's not a situation. So the trailers are not identified asset, as a supplier can deliver any trailer whenever it's available. No, it's basically on ad hoc basis, and ad hoc basis does not comes into picture for lease. Cool. So the person does not have the right to control also. So yes baba, this is not a lease. So this is not a lease. No, I don't want to save it. Clear? Easy? So this was the first concept which I just wanted to explain you, and I hope you are good with these concepts also. So like that way now guys, we are having a lot of questions which I have taken up in the class, but as it is a revisionary contract over here, the revisionary class that we are come up with, I will not go more into the details of something which is very easy again, right? Now moving ahead towards the important point, that is basically accounting for leases. So before I account it for leases, let me just be very clear whether this IFRS 16, yesterday we did IFRS 15, the leases, is it applicable to like every lease transaction? So basically no, no. There are certain short-term leases also. There are certain exemptions also, on which the concept of on the which the concept of IFRS 16 does not apply. So what is the exemptions? So basically I'll just go ahead with the exemptions. Like if I have entered into a short-term lease. Short-term lease means, guys, some lease which is lesser than 12 months. In India there is a situation. For example, if I want to enter into a lease for purchasing a house, a contract to rent a house, I normally rent it for 11 months. Okay, yes. If I contracted for 11 months, for example 11 months, then what am I supposed to do? Ma'am, nothing. Simply do what? Simply book it as an rental expense account debit in P&L account to cash or whatever you have to make the payments. Simple. In that, IFRS 16 will not be applicable. So what is the first exemption, guys? It needs to be a short-term lease. Yes, did you understood that? Yeah, it needs to be what, guys? It needs to be a short-term lease. Then what? Once I understood, okay, Baba, this is a short-term lease, then it should be a low-value lease. What's low value? Like some value, like for example, if it's a tablet, it's a mobile, if you are leasing that, it's very low value. So basically, if I am taking up second, that is if I am entering into a lease for low value asset, even that is known as a short-term lease. So I'm not going ahead because there are some exemptions. Okay. Now, students, what are the key elements? First, who is having the control? Yeah, the control and the decision-making power of the identified asset must be with the lessee. Only then we will say the lessee is having the right to use the asset for a specific time period. Okay. And yeah, it should be clear that the lessee is supposed to make the payments also. Yeah, it should be fixed or variable, whatever it is. So it can be both. Now, I told you that there are certain exemptions. If you can see, guys, we have short-term lease, short-term exemptions. Means if I have taken up any asset, okay, with the lease term of 12 months or less, that is which is not extending beyond 12 months, no, then it is known as a short-term lease. And if it's a short-term lease, definitely what will I be doing it? I will not be charging IFRS 16. So I will not be accounting it as per IFRS 16. No, I will account how? As per normal rentals and directly put in the P&L as an expenditure. I hope it's clear. Yeah. Then, and for example, if this is a situation like low value, then what I will do? Okay, I can book it as per the straight line method. Now, second, I told you second example was low value asset exemption. That is if the asset is there which is having very less value. For example, it is like some asset that you have taken whose rentals are lesser than 5,000 or whatever asset's value is less than $5,000. It's nowhere written properly, but yeah, it's something which you can understand it. So that is low value exemptions. Very simple. Now, students, over this, I have completed a lot of basic things. Now we come up with the important things. Over here, as I told you, we have two parties, right? We have lessor and we have lessee. We have lessor and we have lessee. So the first one, who is going to account what? If you see, both of the party has to book the accounts. Both of the party has to record in its financial statements or some or the other way. Yeah, both of them have to write the financial statements. If it's a normal lease means on which IFRS 16 does not apply. Ma'am, it's my rental expenses debit directly to P&L account, yeah, to whatever cash. But if it's entering into a proper lease agreement which is more than 12 months, students, we have to follow the concepts of IFRS 16. So what are the concepts of IFRS 15 and 16 and how are we going to go ahead? Let me now just do one thing. I'll add 3-4 more slides. Yeah, so it is easy. Okay, so what is IFRS 16, students? For us to understand IFRS 16, what's the first concept? Yes, we have to bifurcate it between two parties. Lessor and the lessee. Yeah, and I told you initially that from the perspective of the things that we learned very prior, we were having the lease agreement into two parts. One was the operating lease, another one was the financing lease. Yeah, financing lease. So what is operating lease, guys, and what is finance lease? Today these two bifurcation of the types of leases is not there with the lessee. So for lessee, you don't have to think what type of lease it is, but this is a concept only applicable towards whom? Okay, this is applicable towards only this lessor. Only this lessor is very much concerned with this type of thing. Okay, cool. Yeah. So what is all the stuff? For example, for the first, I'll explain you what is operating lease and what is finance lease. So yeah, that is being bifurcated only with the perspective of lessor's accounting only. Please take care, huh? Please take care very highly. Yeah. So if I go ahead, first of all, if the lessor is having, try to understand, if the lessor is having an asset, okay, like, see, lessor is whom? The one who is actually the owner of the asset. If I'm the owner of the asset, that eventually means I am having very much money and I have purchased the asset. I'm the owner, I have purchased the asset. But if I have purchased the asset to use it for my business, yeah, but for time being I don't want to use it in the asset, and for time being I have given it to the lessee for a shorter period, means not for the whole life, okay, for a shorter period. Right now I don't want, for example I am the lessor and I have purchased a machine whose economic life was 10 years. I want to use the machine. I am the lessor. I'm talking about the lessor's perspective, okay. I want to use the machine, let's say for 7 years. So what I did, for 3 years I gave on lease. For less than 50%, of the life of asset, if I gave it to the lessee, that means it's an operating lease. Means the lessor is going to operate the asset. He wants the asset. He want to use the asset for sure in the business purpose also. Means less than half of the economic life only I have given it. Means more than 50% of the asset's life I am utilizing for my business purpose. If yes, then it's known as an operating lease. Plus, then what is finance lease? With finance lease, you will understand more operating lease. Finance lease means, students, this is the machinery. Yeah, this is the machinery. Machinery is having a life of, let's say, 10 years. For 9 years, I am the lessor. I have given for lease. I have given it on lease. Oh my god. For 9 years, if I have given on lease, means, just think and tell me, do the lessor really want to use the asset for his business purpose? No, ma'am. So what you'll think, acha, I am having very much money. So what I did, maybe I invested in some asset and my work is to give it on rent. So yeah, initially, intentionally, my business was not something to use that asset. So what I did, I just gave it on rent so that people can utilize it and etc. So that is known as finance lease. Means I am acting something like a financier who is having very much money and investing in the asset and giving it on and on. So yeah, that is basically known as finance lease. Now I am not going ahead with what to be done and what not. But this concept is irrelevant. Whose perspective? From the perspective of lessee. Because today, the lessee is obliged. The lessee has to record what? Has to record the asset. Which asset, ma'am? Which asset? ROU of the asset. Means what, guys? Means what? For example, if the lessee has taken up the asset on lease, means the lessee want to utilize the asset for sure. And if I am the lessee, I want to use the asset, so it is in my control. Yeah, it's in my control. So today, I have to book in my financial statements. Yes, guys, in my financial statement, in my financial position, two things. Yes. Somewhere I have to make asset. Seriously, ma'am, it's not my asset. I am not the owner. It's okay. If you are not the owner, the lessee is not the owner, but are you not having the right to use? Yes, ma'am, I'm having right to use. It's there. So, if I'm preparing this as a assets over here, this is my liabilities. Just I'm showing you for your easy thing. So what I'll do, I will record over here ROU asset. Means right of use of asset. Right of use of asset. I'll have some X amount, and over here I'll be having liability. What liability? To make the payments. So it's nothing other than the lease liability. Cool. So some X amount. Now if I'm having this stuff, cool, if I'm having this stuff all, yeah, what will I do, guys? If I'm having this stuff, what will be, first of all, my assets over here visible, and what will be my liability over here visible? For that, students, what I will be doing, let us understand with one question, and yeah, then we can go ahead. So I'll be trying to open up the question for you. Just give me a minute. Wait a minute. I hope the question is visible to you. Okay, before I go ahead with the question, let me explain you the concept only. With then we can do it fast. Okay, if this is my asset, guys, what will I do with the asset? And first of all, what is this date when I'm booking it? This, for example, the lessor and the lessee agreed the contract of lease on, let's say, 1/1/2020. 1/1/2020. So guys, this date is known as the commencement date, and I have entered into an agreement to take it lease for 3 years. Okay, 3 years. Then on this commencement date, I should have the value of the asset here for sure. After that, on 31st December 2020, definitely I should have some carrying amount, some closing value. Yes. So what will be the closing value of the ROU asset? So we need to know. Acha, it's a asset na, but ROU asset, what will I do? I will see what is the X amount, divide by depreciation, that is number of years which is shorter, which is less of the lease term or life of asset So I have to see for how many years I have taken up that asset, or for what is the life of the asset. Okay, so I'll be just considering that. And yeah, we'll be doing it for sure for the lease assets also. Okay, yeah, that is very clear. For ROU asset, ma'am, it's very clear. We can understand it. But what about this lease liability? Okay, guys, if I'm talking to you about the lease liability, I need to know what is the opening liability that you have given up. For example, today, my liability is some X amount on day 1. If you have taken up a loan, just imagine if you have taken up a loan from the bank, X amount. So what you have to do? Ma'am, every year I have to pay interest. Yeah, pay interest on that. It's an X amount. So ma'am, every year please pay interest on that. Your liability will increase. And at the year end, you have to actually make the payments. For example, if I'm the lessee, if this is my opening liability, I'll pay interest. And from that day, I will definitely do what? I'll reduce my liability by actually making the lease rentals. If you actually make the lease rentals, your liability will be reduced and you will get the closing balance. So you will be figuring it out now what it is, like how it is. So for example, something on day 1 is your liability, some X amount liability. So I need to know, okay, this is what I have to pay. On that interest also I have to pay. And I'll be very happy if I'm making my payments, so that by the end of 2 years or 3 years, my liability will be over. So over here, if you don't understand, I'll just copy it and I'll make one question for you guys. So that will be very easy. Okay, yeah, I'm just pasting it up over here, the question. Yeah, for example, now guys, I have taken up a lease on 1 Jan 2020. Cool, it's 1 Jan 2020. Okay, 1st Jan 2020 for 3 years. And every year, guys, I'll be paying you the lease rentals of, let's say, $10,000. And in the market, there is a discounting rate of 10%. For example, can you tell me what will be the asset or what will be the liability for 3 years? So I can understand, ma'am, on 1st Jan 2020 you have entered for 3 years. So year 1, 31st 12 2020, 31st 12 21, 31st 12 22. So I have to make the payments. I have to make how much payments? Ma'am, every year 10,000 payments I have to make for sure. So what I think, ma'am, my liability is nothing other than 30k. Okay, can I just take up that? Yeah, it's not going to work well for me. Okay, cool. Okay, I just wanted you all to just read it, but cool. Okay, okay. If this is the thing, I think like, okay, ma'am, 30,000 is something which I need to pay. 30,000 is something which I need to pay. But this is to be paid when? After 3 years. Will after 3 years be your liability today? No, ma'am, we know the discounting factor. Yeah, the concept of present value. So if my discounting factor over here is 10%, I have to book this all cost to the present value. So how will I find out, guys, the present value? So find out the present value of lease liability and ROU asset. So what I'll do, guys, simple. I'll go for the year 1, end of year 1, year 2, year 3. Every year I need to pay 10,000, 10,000 and 10,000, which is obviously not 30,000. I didn't have to pay 30,000 because there is a factor of discounting factor at the rate of 10%. What's the discounting factor? Students, my students know to do this. The 10 divided by 100 plus 1, that is 1.1. We need to divide it by 1.1. So 10,000 divided by 1.1, that is basically over here 9090. Again equal to, guys, we'll get 8264. Again equal to, we'll get 7513. If you take up the GT sum total, you'll get something around 24868. So today your value of the present value of the liability and ROU asset on the date of commencement is not 30,000, because your liability will be something like at the end you have to pay, but bring it today. If I settle it today itself, only this much amount I'll pay, that is 24,864, 24,868. So today, if you just see this, my ROU asset will be over here 24,868, and exactly this much will be my liability also, 24,868. For example, the life of the asset and whatever it is, but I have taken it for 3 years term. So what I'll do it every year, like I'll depreciate it. So my depreciation will be nearly 8289. So 8289 will be my depreciation, which will go in my P&L account as my expenditure. Yeah, and I'll get what, guys? I'll get the carrying amount of the asset at the year 1. That is basically 24868. Will I get 16,578? Say yeah. So 16,578. So this is my carrying amount of the asset, which is very clear. Like this is a situation happening up like year 1 end. Okay, but you'll be astonished to know what about the lease liability. Now this is the liability, 24,868 on year 1. I mean day one. So yeah, my lease liability over here is 24,868. Students, this is what your opening liability. I want all my students to know this. Yeah, whenever we have to create a liability, lease liability, please draw one table. That is, what is your, okay, I'll just yeah, I would like to just make it down. Okay, I'll draw it down. Yeah, but I required one more table, but like one more column, but eventually I didn't made it. So yeah, it's cool. Just try to understand it, guys. What I can do is now over here, try to grasp it. What I can do is I can book over here the opening liability. What's my opening liability on day 1, year 1? And my opening liability was 24,868. On that, every year what I have to pay? Interest I have to pay. Yeah, interest at rate of 10% I'll pay. So please on that pay 10% interest, 24868 into 10%. So my interest expense will be this much, which will be charged to P&L expense every year. Yes. Now, when you come up to the year end, what I will do? See, it's compulsory year end. You have to pay 10, 10, 10. Okay, I have to pay. Yes, you have to actually pay. So actually, lease rentals paid. How much? 10k, 10,000. First year, second year 10,000, third year also 10,000. Okay. So if I ask you, what's the closing liability, guys? Yes, my closing liability over here turns around to be how much, guys? Closing liability is add your interest, that is 24868 opening liability plus 10% minus what you actually paid. Do you get something around 17,354.8? Now this closing liability for the year end becomes the opening liability for the year 2. So it's 17,354.8. On that again, please enter 10%. If I'm entering 10%, that is 17,355. And if you are deducting again paying 10,000, definitely you will get this answer at the end, 9090.28. Again, the second year's closing becomes the third year's opening, that is 9090.28. Again on the 10% interest, it's 909. And if you pay 10,000 for sure, you get a 0 over here. So by the end, guys, my liability is settled. By the end, my liability is settled. I tried to explain you to the best which we can go ahead. But students, if you didn't understood it, please need not worry. We have a wholesome concept and the question for that. And yeah, we'll not be now wasting more time. Yeah, we can do the questions. Yeah, in that a lot of things I'm going to write it. So maybe it can take some time. But obviously, will not be wasting so much of time. For sure. Okay, yeah. So without any further delay, let us understand the question. Okay, so lease liability. The company entered into a lease agreement. Okay, when he entered into a lease agreement on 1st Jan to lease the machine for 6 years. Okay, so there is a life of 6 years. Cool, there is a life of 6 years. The contract requires the payment of 2,000 on signing of the lease. So on day 1 he required what? On signing of the lease he required on day 1. Now this is a hint, guys. Well, signing of the lease means the date of commencement. On the date of commencement, when you sign the contract, you have to pay $2,000. Cool. And another 5 payments you are supposed to make when, and another 5 payments you are supposed to make at the end of each year. At the end of each year. So maybe after first year end also you have to pay, second year end also, third year end also, fourth year end also, fifth year end also. For 5 years. Cool. Because day 1 you pay, because you have taken the asset for 6 years. If you have taken the asset for 6 years, and 1 payment you are making on day 1, so remaining 5 you have to make it the 5 years in. The company, the IIC, basically has option to buy the asset at the end of 6th year for $500. If it's buy the option means maybe the life of the asset will be 5 years or 6 years only. So he'll be having an option. By the end of 6th year, if you want, you can purchase it for $500. Which IIC is reasonably certain that I am going to purchase. Means acha. There is a situation where IIC in the first year start, the day 1 he has to pay 2,000 for first year's end, second, third, fourth, fifth, sixth. 6th year's end he has to pay 500, so that asset is his own property, like that way. So here the IIC is reasonably certain that he is going to have this expenditure also. The rate of the implicit rate of return is 10%. Calculate the liability to be recognized on day 1. So what are we going to do, students? We are going to understand what is the present value of the liability. Then we have to find out the present value of the liability. Cool. Up next, students, please try to understand how are we going to formulate this. So we have to think from the perspective like this. We have to make the table. We are supposed to make the table, and for us, I have just made the table. So I'll just write it. What is this? Initial recognition of the lease liability is what? Over here. Yeah, so this is my initial lease liability. Initial liability to be recognized. This is end year, and this is the cash flow statements. This is 10% discount, and the present value we have to find it out. Students, over here if I write on day 1 means not the end 1. Day 1, how much you have to make the payments? Ma'am, 2,000 I have to make the payments. What's the present value if you discount it by 2,000? Ma'am, 2,000 divided by 1.1? No, on day 1, the value on day 1 will be exactly 2,000 only, right? So it's nothing, like it's just 1. It's just 1. That is, the answer will be basically 2000 only. Will be 2000 only. The present value will be 2000 only. Yeah, if you want now, I can do it one thing for us. Without wasting time, you can just like, give me a minute. I can just copy the question if I want. Yeah. Yeah. So now we can do one thing. We can just try to understand what's the question. I'll try to frame the question for us, so that I'll write it on and on. Okay, I'll write it fast. Give me a minute. Then we can make it, because I don't want so much of time for us to waste, isn't it? Yeah. PowerPoint. Yeah. Give me a minute. Yeah. In the PowerPoint, I will just write the question which is there for us. Yeah. You can copy the question maybe if you want. So yeah. There is a question that the company has entered into an agreement on 1st Jan, on 1 Jan of some X amount, and for 6 years. Day 1 he has to make the payment of 2000. Yeah. And after every year end for 5 years he'll make 2000, 2000, 2000. At the end of 6th year, because it's for 6 years, he'll make 500 payment, and the discounting rate is, let's say, 10%. So how will I make the liability? Just try to understand. Day 1 it will be 2000 only. After year end it will be like first year end 2000, another year 2000, 2000, 2000, and at the end of 6th year it will be 500. So can I book like this? Yes. I'll write it over here. The end basically over here, my cash flows which I have to make the payments for, and this is my discounting factor at the rate 10%. So day 1, what will be the amount? 2000. So if you pay 2000 on day 1, you don't need to bring forward. It is 2000 only. 2000 divided by 1, it's 2000. फिर end of year 1, you have to pay again 2000. End of year 2, end of year 3, end of year 4, end of year 5, you have to pay 2000 again. 1, 3 and 5. But end of year 6, you have to pay extra. That is extra 500. So what will be my amount, guys? What will be my amount if you bring it like that way? Okay, just try to understand. This is my first year. Year 1, year 2, year 3, year 4, year 5 and year 6 end. Okay. This is on day 1. Day 1 you made 2000 payment. It's minus. Your first year's end, you have to bring it 1 year forward. So if I bring it 1 year forward, what I'll do? 1.1. I'll just divide it. So 2000 divided by 1.1. Is it 1818? Yes. Over here, second year's end, you have to bring it 1 year and 2 years forward. So divide by 1.1. Is it like 1652? Yes. You have to bring more, 1, 2 and 3. It's 1502. Again, if you bring it, it's 1366. Yeah. If you bring it again, guys, it's gonna be divided by 1.1. It's gonna be 1241. Yeah, it's gonna be 1241. Now this we have done, and this is third year, fourth year, fifth years, and sixth year's end. Oh, sixth year's end you have to pay 500. So today what is the value of 500? Bring 1 year, 2 year, 3 year, 4 year, and 5 years. Okay, sixth. Bring 6 years forward. So divide it 500. Divide by 1.1. Raised to 6 times. Is equal to 1, 2, 3, 4, 5, 6. Are you getting 288, guys? Please do it. You'll be getting 288. So it's 288. So if I take up the total, definitely I'll be having the value, which is nothing other than 7860 plus. It will be near to 9860. It is nearly 9860. If this is the value, guys, now this becomes my lease liability. Okay, but this becomes my lease liability. But what they have considered it, or what the institute considered it, this is something on day 1. If you pay, this will not be your liability. This is something paid. So minus 2000 which I paid on the date of commencement, if I paid, my remaining liability will be 7860. It will be 7860. I hope it is understood. So don't worry, I'll show you the solution also. Just because I didn't wanted to waste so much of time, so that's the reason. Yeah. Let me show you the solution also. Word. Yeah. So yes, if you can see it, the initial amount of the liability is recognized as this. First year's end, they have not considered day ones, that is 2000 on the day one, that is 2000. So year end they have considered. So these are the presence value which we are getting it. So if I take up the total, it will be 7860. Yeah. And initial payment of 2000 is not included in the schedule because it is not the liability, it is something that's in the day one only I have made the payments. So that's all. I hope you guys have understood this. Yes, very easy. Isn't it very easy? Yeah. I hope it's very easy. See, I'm not writing in the word because I want to write it fast for now. Okay, up next we have third question. Please allocate the interest allocation required following the example 3. Calculate the amount of liabilities which we have to recognize based on the P&L account. Okay. So now what I have to do, guys, I have to also see what is the interest that I have to pay. Simple. What I have to pay, guys? In the question, if it gets carry forward, okay, if it's going to get carry forward, will hardly take any minute. Will hardly take any time in that also. See, students, this is my liability. This is my liability. What is this? This is my present value, 7860. So your present value of lease liability turns around to be 7860. If this is my liability, what I have to do, ma'am, every year now I have to pay interest on that. Yeah, every year I have to pay interest on that. Yes, so I'll just write it. My present liability was 7860. Okay, my present value of lease liability is 7860. Every year I'll pay what? Every year I'll pay interest at the rate of 10%. I have to pay. And actually, what is my lease rentals, ma'am? Actually, my lease rentals are 2000 every year end. Plus, if you understand, 6th year end I'll pay more 500. Yeah, that is so true, isn't it? So yeah, let's make it that column. If you remember, I've inserted with the code table. Yeah, simple. It's very, very, very simple. It never takes a lot. Yeah, so basically this becomes my opening liability. Yeah, on that interest I have to pay 10%. Then I have to make the actual payments and I get the closing liability. So what I need to do, year 1, year 2, 3, 4, 5 and year 6th end. Okay, clear. I hope you guys are getting it. Yes. So what's your opening liability? Ma'am, my opening liability is this 7860. So 7860. Please pay 10% interest on that. Ma'am, that will be 786. What is the actual payment here? Year 1, ma'am, I'll pay 2000 year end. Year 2 also I'll pay 2000. Year 3 also I'll pay 2000. Year 4 also 2000. And year 5 also 2000 I'll pay. 6th year end, ma'am, I will pay 500. Yeah. Sure. Now, what is your closing liability? 7860 plus 786 minus 2000. Are you getting something like 6646? Now, this closing becomes the opening for the next year. So, 6646. Plus, what's the interest of 10%? So, will it be 665 minus 2000? Yeah, I'm getting something like 5311. Again, this becomes for the next year. So, 5311. Pay interest on that. And again, book the closing. So, you'll get some 3842. Okay, that becomes for the next year's opening, 3842. Again, interest on that, 384. Minus 2000, you'll make up with 2226. That becomes the next year's opening. Again, interest. Oh my god. Isn't it so easy? You get 449. Now, again, that becomes the opening. 10% interest on that. And if you make the payment, definitely you will get the 0. Yes. So, this is something which we have to book it. Okay. I think like there are no more doubts for this for sure. Yeah. Now, whenever it's a liability, we have to specifically say, okay, closing liability is this for first year end. For first year's end, my closing liability is 6646. But out of this 6646, can you tell me what is your current and what is your non-current liability? Yeah, we need to bifurcate. Yes, current liability, non-current liability. Current liability means something that you are going to pay within a period of 12 months. So think, within a period of 12 months, how much liability will be reduced? So okay, the difference between these two, that is 6646 minus 5311. Yes ma'am, this much liability you have to reduce it within a period of 12 months. 6646 minus 5311. So your 1335 will be reduced very soon. So yeah, I can just write it like that way. Your 1335 liability will be paid within a period of 12 months, within 12 months. So my liability stood around to be, the closing liability stood around to be 6646, out of which I can bifurcate current liability and non-current liability. Non-current liability means something more than 12 months, which is clear. What is more than 12 months? Ma'am, more than 12 months is exactly this. 5311 is more than 12 months. So it's 5311 and your current liability will be 1335, which is nothing other than 6646 minus 5311. I hope it's clear. Yes, sure. Now this is what I'll just show you the solution which is presented by our institute. So guys, we need to be very careful with the solutions, because small things it's going to cater a lot. So yeah, I'll just present you the solution. It will be very easy. Yeah, are you able to see the solution? Yes. So yeah, this is the solution. So this is the liability. Every year interest on that, we get the closing, first year, second year, third year, fourth year, fifth year. And yeah, they can present some non-current liability and current liability for sure, which is very easy. I hope nobody is having any sort of doubts. Clear? Shall we proceed? Yeah, taking up the very easy questions till now, guys. Now let's understand the fourth question, which is ROU asset. Now yeah, this becomes important. Now why is this becoming important? We need to know. There are certain things which we need to understand about the concepts. Okay, try to understand very slowly. Delta and company entered into a contract to lease an asset on 1st Jan 20x8. Okay, so when is the company entering into the asset? So I'll write it over here only just to explain you. First of all, the contract is entered when? Yeah, the contract has entered on which date, guys? The contract has entered on which date? On 1/1/20x8. Okay, I'll just write it like that. The terms of the lease are basically 6 annual payments. 6 annual payments. 6 annual payments of $2,000 for sure, with the first payment on 31st December 20x8 means after 1 year. Okay, so can I write payable at the end, yeah, of every year or year? Yeah, so it's at the end. Okay, Delta will incur further installation cost of 1,000 cost. So yeah, you know, when I'm taking up some asset on lease, definitely I have to pay some of the other thing. Yeah, means it happens, it eventually happens. Like the company is liable to make some payments also. Like I have taken some asset on rent. Okay, I want something beautiful, maybe I can modify it. Is my expenditure. Cool. So this is basically the expenditure which the company is going to incur. No worries, let him incur. Yeah, from this now I'll start my solution. So I'll make it red. Okay, what they have told us, further there is a cost of 1,000 as an installation cost. The Delta will return the asset at the end of year 6. Okay, so only for 6 years it is a situation. Okay, and further expenditure was 1,000 for installation. And yeah, I can just copy it and paste it over here. Delta will incur further 1,000 as a cost of installation also. So yeah, that is also my cost. If I'm incurring any cost, don't you think that is something which I need to add it in the cost of an asset? Yeah, it's my asset, so I can add it. If it is particularly for that asset, I capitalize it. Yes, that way. Cool. I would like to capitalize it. Then it is returned over here. The company will return the asset within a period. The initial liability is calculated this much. Okay, they have already given us. Easy. They have already given us that this is your present year's liability. So what's a lease liability which is recorded at the day 1? Okay, so my lease liability is given at the year. That is, my lease liability on the day 1 is 8710. So I can just simply put it like that way, that my lease liability which is recorded initially is 8710, being the present value of the lease payment discounted at the rate of 10%. If you guys have any doubt like how did it came, you are free to please calculate one more thing. I'll just tell you, please try to calculate that. Okay, every year if you have to pay 2000 for 6 years, can you do like that? Can you please do like this? 2000 divided by 1.1. Please do in your calcs. 2000 divided by 1.1 one time equal to, that is 6 years. So equal to 3 years, equal to 4th year, equal to 5th year, equal to 6th year, equal to. Press GT. Do you get 8710? My students knows this concept. Yeah, or divide by 2000 divided by 1.1, 1.1 raised to power 6, you get 8710. Thank you. They have given up the questions. So they have already given you the lease liability. So yeah guys, what I got the lease liability of 8710, being the present value of the future lease payments discounted at the rates. Cool. Very easy, very easy. What have they given? The initial recognition is this. Okay. Explain how the lease will be recorded at 31st December 20x8. Okay. Now my solution starts. So they have told us, please book the situation for the year ending on 31st December 20x8. Now with this, how can I go ahead? So ma'am, I got this lease liability at the day 1. Okay. What will be my ROU asset? Oh. What I have to do? My ma'am, cost of ROU asset is lease liability. You remember? I normally record lease liability is equal to ROU asset. So my lease liability initially on the date of commencement is 8710. Similarly for ROU asset also it will be 8710. Plus I have some installation cost also, installment cost also, which is basically $1000. So will it not be 9710? Yeah ma'am, it will be $9710. So on the day 1 guys, my ROU asset will be recorded at 9710 after adjusting what? Yeah, after adjusting the installation cost also. Yes? Yeah, cool. Easy? Yeah. What next up? Now I need to know, this is something on the day 1, it's clear. But guys, what about the ROU asset? Ma'am, I'm having an ROU asset, yeah? I'm having ROU assets valuation, which is basically 9710, yeah? Just try to understand. The life of the lease term, the lease term is, let's say, equal to 6 years. What will happen at the year end? Guys, I would like to depreciate it, yeah? I'll depreciate it for, let's say, 6 years, for 6 years. So what will be my depreciation expense for year 1, guys? Will it be 9710 divided by 6 years? Yeah. So what it comes to 9710 divided by 6 years? Ma'am, it is 1618. So if my depreciation is this, can you tell me what will be your carrying amount at the year end? Yeah. So your carrying amount of ROU asset turns around to be how much, guys? Please reduce 9710 minus 1618. What are you getting it? Are you getting it 8091? Are you getting it 8091 point something? 8092. Can I book this as a dollar? Yeah. So this is something about my ROU asset has also turned up. So what I can write it, guys? So what I can write it over here? The ROU asset is depreciated basically over the period of 6 years. Cool. So we have to take up what? We have to take up the carrying amount also. So yes, it will be having a 6 years life. So basically we are supposed to depreciate it over the period of life. And yeah, if I depreciate it, definitely I'll get this value. Till here, anybody is having any doubts? I don't think, it's very simple. So we have completed the concept of ROU asset also. But what about this lease liability? We know lease liability every year. What I have to do? Simply I have to add on interest on that. Yeah. And then what I have to do? I have to make the actual payments. Simple. Every year I have to add on interest on that. So yeah. So let's go ahead with the what have they given us? What is that? The lease liability initially it is measured at 8710 and the rate of interest is 10%. Okay. I can book like this. I can insert a table, which is one of my favorite stuff to be done. But I have to do it only for 1 year. Cool. Okay, I'll just do it for 1 year. So yeah, it's my opening liability. Then what I can get? Interest at the rate of 10%. Actual payment, how much I made it? In the next column, actual payment, how much I made it? Is it 2000? Yeah, actual payment 2000 at the year end. And last becomes my closing liability. Closing liability. Yeah. So can you tell me what is the opening liability given in the question? Yeah, ma'am, it's given 8710. Ma'am, you can go on. 8710. On that, if I add 10% interest, I'll get 871. But I'll make an actual payment of 2000. So that shows my closing liability of 8710 plus 871 minus 2000, which comes up with 7581, right? Yes. So it's 7581. 7581 is your closing liability. But now if I want to understand what is your current and non-current liability, ma'am, we have to go for second year also. Yeah, so that I can understand. Cool. So I'll just copy it and I'll paste it over here. Oh, yeah, cool. Otherwise I'll write it over here only and just try to understand. 7581 becomes for the next year. On that again, if I taking 10% interest, I'll get 758. Yeah, so I'll get 758. Then again I'll pay 2000 as an expense. So what will be my amount? Yeah, will it be 6339? Yes. So if I see the difference between them, so yeah, I can write it over here. My first year's liability is equal to 7581 for sure. But out of which, please bifurcate. Please. You're supposed to like bifurcate it between. I'm so sorry. You're supposed to bifurcate it between the two parts, which will eventually be what? 7581. Yeah, so it will be 7581 and we have to divide it with two parts, which is first of all current and non-current assets, liability. Okay. So yeah, first of all will be my current liability. And going ahead with I'll be having the situation which is known as non-current liability. If you understand what's a non-current liability, ma'am, it's clearly visible, which is something which is more than 12 months for the next year. So if I just take up this current liability, it is closing liability for the first year minus this, which comes up to be how much? 7581 minus this. 7581 minus, am I getting 124142? Yeah, 1242. But what is a non-current liability, ma'am? It's clear, 6639. That's all. So that's all. So we understood this, but now this is something which I have to formulate in the solution. Yeah, so how I'll do it, I'll just take up this and I'll paste it. So the lease liability is amortized, which we have to get the finance. Now this interest of 10% is nothing other than the finance cost. So what's the finance cost for the year one? It's 871. Did you got it? 871? Yeah, this is 871 finance cost, correct? And we have to split it between the liabilities. For the presentation purpose, what I'll be doing, current liability of 1242. Yeah, 1242. Yes. Then what it will be? Achha, this is something like for the, okay. Then what I will be doing, students? In the next year, my interest will be 780, 75. This my next year 758, and my non-current liability will be 6339. 6339. Like it's nothing which we didn't understood. I hope you all got it. Yeah, so this is the way we present the answer, and yeah, students, this is the way we get good marks, like a very beautiful marks. So I think, yeah, even this question was something which was manageable, right? ROU asset. Yeah, are you fine with this? Yeah. Can we go ahead with the next question? Yeah, there is one more question, but basically this is a concept which is different, which I want you all to understand it, my students. Yeah, this is a concept which I wanted you all to remeasure. Yeah, the remeasure concept, which my students told that, ma'am, we need to know it again. So yeah, definitely I was not able to take it up in the class because I just it's something which is another way I wanted to take up in the YouTube live. So for sure we'll be doing it ahead. Okay, now what is this? What is a remeasurement of the liability? Sometimes whatever the lease transactions are happening, there are certain changes which we need to take up. Means what I initially thought and what is actually happening, there are certain changes in that. For example, initially maybe your lease liability was not so much, eventually it came up more. That is, over here if you read it, a lessee is required to remeasure the liability when there are changes to the lease payment within the original terms and conditions. Just understand, okay? I'm just now showing you the PPT, and yeah, we can go ahead with that. Yeah, you know this concept very well. You all know, because some other way we have did this thing. We know this function. Okay, you know one thing. For example, if I want to take a house property on rent, okay, I want to take a house property on rent, on lease. Why lease? Because something it's more than 12 months. Let's say for example, I took a house property for, let's say, 3 years. Initially my tenant told me, like the house owner told me, okay, he told me, okay, Baba, you have to pay the lease rentals. How much? He told, okay, every year you have to pay the lease rentals of dollar, let's say 15,000. Cool. Year 1, year 2, year 3. But what happened after year 1? Let's say because of the market, the rates increased. Yeah, this happens, you know. Today I'm telling my tenant in India, okay, you have to pay this much rent. Tomorrow, because of inflation, you tell, no, this was the rate when the inflation rate was this. Now when the inflation rate has increased, I am increasing your rents also. Yeah, when the inflation rate increases, I'll definitely would want to take more rents. Yeah, so that way there can be modifications, which is very normal, which everybody of us would have seen like any a time. Yeah, so what happened in the first year? Let's say I told the market rate, that is basically we get some index on which we measure. Let's say if I say the market rate was 124, at the time the rate was 15,000. Let's say today in the second year the market rate has turned to be 130. What will be the rate? What will be the rent? So I can simply do cross multiplication. So I'll just do the cross multiplication. What I'll do it, guys? Yeah, my cross multiplication. Yeah, my students knows my spellings are very bad. My handwriting is also very bad. So my index is what, guys? My index is 124 and 130. When it is 124, my lease rentals are 15,000. When it is 130, how much it is? Can I do 130 into 15,000 divided by 124? Yeah. So my new lease rentals will be how much? Please do it. Like 130 into 15 divided by 124. It comes up to be 15,725, something like that. So now it's $15,725. So from the next 2 years, second year, 15,725 and 15,725 will be for the next year 2 and year 3. Now, considering these values, we have to calculate our lease liability. So yes, students, don't worry, we'll be going ahead with the question. And yeah, this happens because there are certain changes, as I told you, in the situation, which is something beyond our control. So if you read it, a lessee is required to remeasure the lease liability when there are changes to the lease payments within the original terms and conditions. So whatever original terms and conditions which was allotted to the lessee, if it is changed, so definitely the lease payments will also get changed. Okay, this is due to because a change is expected amount or change in the expected amount of payable under the residual value agreement. Means, for example, you must be knowing, some of you must be knowing, my students must be knowing that I told you, okay, after 6 years, you have to make the minimum guaranteed residual value. You remember? MLP, guaranteed value. You have to pay me, let's say, $500. But then I got to know your use is very bad. I have to demand more. So maybe I told you dollar minimum 500. No, not even 600. You have to pay minimum $1,500. Okay, if that is changed, you may have to change your present value because your expectations will get changed, right? Yes. A change in the variable lease payments. Okay, maybe because of the change in the rate of indexes. Yeah, maybe that could be the reason. A change in the lease terms. Oh. That could be because of the non-cancelable lease. For example, initially the lease term was 5 years. Now it's 8 years. You have to change it. And when you have to make the change, the date on the things are going to change. Only from that day. Means it cannot be retrospective change. No, it needs to be prospective change. A change in the assessment of the option to purchase the asset. Means initially you were not having an option to purchase, but now if you want to purchase it, that shows me what, guys? That means at the end you have to make some more payments. So yeah, These could be some reasons of which basically guys we need to remeasure our liability. Now the concept of remeasurement of liability is important. So because with that we can do this question. Yeah, students, please try to understand it. Please try to understand it. Okay, I'll be going not so fast. Yeah, because I have promised my students that I'll be taking up this question, and yeah, this is what we are up with our promises. Okay, yeah, so let's understand it. So now this measurement is based on some price index. Means as I told you, because the inflation rate increases, your liability also increases. This is what we can make it imagination. Yeah, definitely it will increase that way. Okay, it will increase for sure. So on 1st Jan 20x3, the company entered into 8 years lease of the office space. So what is that, guys? It's 8 years lease. So the lease term is, okay, I'll initially write the solution also. Like, it's not the solution basically, it's something like my interpretation. Okay, so my lease period turns around to be 8 years. Okay, cool. So what they have given up next, the contract states that the lease rentals for each of the first 2 years will be 30,000 per annum. First 2 years only. Yeah, my life is 8 years, but out of which for the first 2 years, for year 1 and year 2, it will be 30k, 30,000. Okay, it will be 30,000. It will be 30,000. Students, please, I'm trying to make you understand. Please understand simply. Please get it. Yeah. Okay. I think you guys are understanding it for sure. Like, I'm expecting a knowledge from you for this part. Okay. Okay, if this is a scenario they have given, but that is something which is weird. Why? First 2 years is 30k payable at the start of each year. Start of each year. What's start of each year means? First year, if you're making the payment on day 1, what it is? Will you discount it? Means, for example, sitting on the day 1, if you're making the payment of 30k, if you discount it, your discounting factor will also be 1. Means 30,000 on day 1 will be 30,000 only. Yes. But what if for the year 2? Year 2 also start. So you have to just pull it back by 1 year. So 30,000 divided it by only one time the discounting factor. Only one time the discounting factor. Clear? Yes. Okay. This is something which we understood it. Okay. This is something which we understood it. What they have asked us. After 2 years, the rentals will be assessed when the price is going to change, which is 126 on first day. The day on which you entered on 1 Jan 23. Basically, I can write it over here. On 1 Jan 2003, your index rate was 124, and now because of the change in the rates, 126, and now on 1/5/2005 the rate is this much. Okay, on 1 Jan 2005 the rate is this much. So over here on 1st January basically 2003, this is the stuff which is not 124 guys, it's 126. Yeah, and over here it's 134. So what if I say you on 126 I used to make the payment of 30,000. I used to make the payment of 30,000 as a rentals. So if it's 134, how much it will be? Can you get it like this, guys? Can you please get it like this? Will it be like 134? Oh, sorry, it's like that. 134.4 into 30,000 divided it by 126. If I get it, can you tell me what will be your rentals? Please do it. Please do it. 134.4 into 30,000 divided into 126. Is it $32,000? Yes. So what are they trying to tell us, guys? Understand. If this much you understood, now I can explain you with these lines also. But yeah, try to get it more clear. That is, on day 1, when the rates are 126, you used to pay 30k. When the inflation is there, you have to pay something more. That's cool. And whatever rentals you are paying on the day 1 itself. Means in advance. So not in the year end, it's in the advance. Cool. Till year end, there is no doubt. After 2 years, the things has been changed. Okay. The asset will be depreciated on SLM basis for 8 years. Even that is cool. Because yeah, the life is 8 years. The borrowing rate is 5%. Now this line, some of you will not understand. But I want everyone to understand. What is this? The 7 years factor is 5.76. And 5 years factor is this. Ma'am, why am I getting 7 years factors? And you know, how will I get this factor? First of all, why am I getting 7 years factors? See, if you understand my words, try to grasp it. On the day one, do you know something is going to change? Ma'am, no, we were very blank. We just knew, okay, Baba, this is a scenario, 30K you have to pay it for like 8 years. Okay, for like 8 years. Then ma'am, why 7 years given? Ma'am, first thing, you paid it on day one itself. Then there is no present value for that. So remaining 7 years, they have given you the present value. So how did they get 5.76? Do the discounting. It's 5%. 5 divided by 100 plus 1, you get 1.05. My students, you know this concept. 1.05 divide equal to for 7 times. 1 time equal to, you get 0.952. Another 907. Another equal to 0.863 3 times. Another 0.822. Another equal to 0.786. Another 2 times equal to and equal to. You get 0.713. If you press GT on that, do you get something like 5.7? Yeah. Do you get that 1.05 if you're doing it for 7 years? Do you get 5.78? Guys, I am to getting 5.78. Yeah. So what I just did it, guys, I normally do like this. I'll tell you. 1.05 divide equal to for 7 times. 1 time, 2 time, 3 time, 4 time, 5 time, 6 time, 7 time. After doing that, I press GT. I get exactly the amount. See, students, I'm trying to like make it how much easy I can make it. So I get that. Because why? Forget about right now. Forget about this thing happened with you all. Forget about that, guys. Just think, if this was a scenario, what would have been the situation? If 30K was a scenario for like every year. So what ideally I would have made the payments. Okay, ideally, what would be my lease liability? So on day one, when you paid 30K for year 1, your present value will also be equal to 30K only. But for 7 remaining years, when I want to make the payment, of 30K, definitely I require a discounting factor, and they have given me the annuity of the discounting factor. That is basically for 7 years they have given me the annuity factor, and the annuity factor is 5.78. If students, if the question, the examiner has helped you out, then make it very easy. Just we have to do is 30,000 into multiplied by 5.786. If you multiply it, guys, 30K into this, you get something around 175.80. Yeah, 173.580 dollars. 173.580. If some of you feel like, ma'am, I am not getting it, so you can do one more thing, guys. See, I'm telling you, this is something which you can do it for easy purpose. They have given, do it 30K, 30,000, get it for 7 years, discount it at the rate of 1.05. 30,000 divided by 1.05, divide equal to, for 3 years if you do like 30K, divide by 1.05, 1, 2, 3, 4, 5, 6, 7, and if you type GT, you get 1735.91. 1735.91. It will be the same. So if they have provided us with the thing, why to like think more? Yeah. So what is this, guys? What is this? This is something which is known as your lease liability, right? Now this amount is nothing other than your lease liability. Why? Ma'am, I got it now as a present value, so it's known as my ROU asset also and your lease liability. But you remember, this is a lease liability because on day 1 you have already made the payment of 30, so I'm not considering that. But if I want to take the ROU asset, oh, what will be my ROU asset? Tell me that. Your ROU asset will be how much? Will be only this much? No, ma'am, this plus 30. Yeah, on day 1. So on day 1, when I'm preparing the financial statements, just imagine now, students, I'm trying to make it so that you understand it very well. Yeah, this is my financial statements. Okay, please don't feel like, ma'am, this is not the way we prepare the financial statements. It's just for our understanding. Okay, I'm prepared it. My liability. Okay, this is my liability, and this is my portion of asset. Okay, this is my portion of asset. Cool. Okay, now I'll prepare everything with black color only because that is something which is more better for us to understand it. Okay, guys, now what is the day 1 liability? So ma'am, my day 1, I made the payment of how much? 30,000 plus my opening liability on the date of commencement turns around to be 173,580. So what is my ROU asset? It's a total. ROU asset is basically the total of 30,000 plus 17580. So if you do the total, will you get 207? No, 27. What it is? The total of, if I'm doing it, yeah. Am I getting 203,580? Yeah, 203,580. What about the life of the asset? Life of the asset is basically 8 years. Can I simply do the depre? Yeah, I can do the depreciation. 203,580. If I depreciate it for 8 years, am I getting something around 254? Okay, yeah. Yeah, I'm getting around 25447. If I depreciate it, my carrying amount at the year first year's end will be, my carrying amount at the year one's end will be how much, guys? 203,580. Am I getting 178132? Yeah, 32. Yeah. But what about my liability, guys? What about my liabilities after? Yeah, this is by year one end. Okay, this is my year one end. This is my year one end. What about this year one end, guys? What's about this year one end? You remember the thing which I used to prepare? My opening liability. My opening liability plus interest on that of the rate of 5%. Yes, on that, ma'am, the actual payments. And I get the closing liability. Yeah. So what is my liability? What is my opening liability for the first year? Okay, day one is 0. After first year's end, it is basically opening is 173,580. On that, if I pay 5% interest, what it is? 173,580 plus 5%. Am I getting some X amount of 8? Am I getting like that way? 8679. Yeah. 8679. Hey, did I made any actual payments on the day one? Yeah, ma'am, you made, na? You made it. But did I made it on the year end? Now this is what is confusing. Now here it is, people get confused. And to my students, we know one concept. We know one concept which is very, very clear. For year one, what I initially did was, I got an amount. Yeah, what I used to do is, I used to not do like that. I used to cut this, but I used to show one more thing over here. Opening liability. But if you make the payment on day one, please reduce your payment. Means if I have to pay today, and if I'm paying it today, my remaining liability will be for the whole. On that I have to pay interest. So what I'll do, opening liability minus the actual payment. Then I'll be having my remaining liability. On that I have to make the payments, and actual payment from here will go away. Because actual payment I have already made it. Yes? So on day one, what is your opening liability? Oh ma'am, my opening liability was this plus this. If I take up the total, was it not? 203,580 minus actual payment that you did it on day one itself was 30k. So your remaining liability turned around to be 17,3,580. On that, guys, if I'm paying the interest of like 5%, I'm getting 8679. So my closing liability turns around to be 182259. Now that closing becomes the opening for the next year. Yeah, clear? Second year. So what is my second year's opening liability? My opening liability is this much, 122259. On that again I have to pay on the day one itself. I paid 30,000. I don't want to like keep it for the whole year. So second year I paid 30,000. So guys, my remaining liability turned around to be 152259. So on that I have to pay for the whole year interest at the rate of 5%, which is 7612.95, or I can take 3. Yeah. So my closing liability turns around to be 1598 712 again 72. Yeah, this is now the thing that you all have to write it. So this becomes your closing liability after 2 years. So 1 year also we took, 2 years also we took. So over here I'll add etc, etc. So my first year's closing liability will be this. My second year's closing liability will be this. First years and second years. Till here I am wondering that no one is having any sort of doubts. Okay. Up next, we need to know, ma'am, this is the carrying amount for the year end. Yeah. What about if I'm taking it for 2 years? So again, second year, if it's you're taking for second year, please reduce depreciation. Yeah, again, ma'am, the depreciation will be 25447. Your carrying amount at the year end will be like that way. Your carrying amount for the year end turns around to be that way. Okay, for second year your carrying amount needs to be how much, guys? It needs to be 178,132 minus 25447. Is it coming 152685? Yeah. So Baba, now this is your carrying amount at the year 2. Why am I doing it for year 2 and year? Because after 2 years the things are getting changed. Yes. Are you getting it? Yes. This is for my year 2 assets. This is for my year 2 liability. Clear till here? Pakka? Are you fine with that? Do now further what I have to do, like I have come up till this is on first day on 1st Jan 20x3. So this is on 20x3, this is on 20x4, or I can write like this also, 20x3, and over here it's basically 20x4. Yeah. Now we are coming up with 20x5 also. Oh yeah, ma'am. Now the things have changed. Now 20x5, what will be the position, ma'am? Things has changed. If things has changed, what's up next? Now, ma'am, you will say whatever rentals you were thinking to pay is not 30. It's not 30. Now things has changed, and now I'm supposed to pay 32,000. Okay, now I'm supposed to pay. I'm just halting it over here because we have to make things. Ma'am, now I have to pay 32,000. So how many years are pending? So total I have to pay it for like 8 years. Yeah, 2 years I have paid. 2 years I have paid. Now more 6 years. So year 1. So 2005. 1 year, 2 year, 3 year, 4 year, 5 years and 6 years. Tell me now, for 2005, when will I make the payment? Oh yeah. On day 1. Yes, 32,000. This day 1 of the next year. So 32,000 on the day 1 will be that only 32,000. Then you have to bring it 1 year, 2 year, 3 years. So that's the reason for this my discounting factor will be 1 only. So my amount will be 32,000 only. But what about this? At the year advance. So what I have to do, this 32,000, I have to pull it back by 1 year. So 32,000 divided it by 1.1 if I do. What I get, guys? Yeah, I'm doing it right now only. So you will get it. Okay. If I'm doing it, am I getting 2090? For these all stuff, if I do it, I get some amount. But we are very advanced. We are very good. This is year 1, 2, 3, 4, 5. For 5 years, have they not given you something? Yes, ma'am, they have given us a discounting factor, annuity. If they have given us annuity, why are we wondering then? That is the 5 years annuity is 4.329. Oh. That is if I paste it over here. This is on year 1. Remaining for this year. That means my lease liability for the remaining 5 years is what, guys? Is equal to 32,000 into 4.329. If you take up, guys, what is the amount of the dollars do you get? So 32,000 into 4.329. If you don't trust me, you can do it on your own also. Definitely you will get the same amount. Yeah, it is 138,528. So can you tell me what is your ROU asset and your lease liability on that day on 1 Jan 2005 basically? Well, my ROU asset will be what? Will it not be the same? Now this is a issue. Why? Because ROU asset, I thought after 2 years needs to be this much. Asset should be this much, 152,685. But your liability, first of all, figure it out, your liability. Now my liability will be 32,000 plus 138,528. So this becomes your present value of lease liability, which is equivalent to how much, guys? Is it 150,528? Yes. Now why am I making it very bold and very yellow color? Because now this is important, guys. If your liability is this 170, yeah, it's 170,528, guys. Please make sure this should be the liability on 1/1/2005. Means this should be the liability on which date? This should have been the liability on 31st/12/2004. That is year end should be the year. Agreed? Yes. But on year 31st December 24, My liability was something else. My liability was only this much, ma'am. 159,872. Oh my god. Eventually, but it was how much? But it was only this much. What happened? Because of modification, what happened? Yeah. Because of lease modification, or I can say remeasurement, students, what happened? My liability increased. Oops. My lease liability increased. Increased by how much, guys? Because it's also present value. So my liability is increased by 170,528 minus 159,872. So liability has been increased by how much, guys? Dollar. Please get it. Please get it. If you just divide it, it's 10,656. So where will this effect go? Where will this effect go? Your liability is increased. I think you guys are getting it what I am trying to say. Yeah, your liability is increased. So if it's increased, where will it go? Where will it go? It has to go somewhere. So what entry can I pass? If I want to increase my liability, credit balance is to be increased. So my entry will be 2 lease liability. I have to increase by how much? 10,656. Ah, but what will be debited? Yes, you are correct. ROU asset will be debited. It will be debited by 10,656. So right now, ma'am, I am having some ROU asset after year. Yes. So on 31st/12/2004, what's the balance of my ROU asset? My ROU asset balance is equal to, which we have taken it here. What was my ROU balance, ma'am? 152,685. Yeah, 152,685. Please add what you have added. 6. So your opening balance for these will be now 1,664. So now you have to depreciate it for the remaining period. Now you have to depreciate it for the remaining period, and my remaining periods are now for how many years? 2 years have elapsed. So depreciate it for remaining 6 years, because 2 years have elapsed. So now on 1st Jan 2025, this is my present value of liability. Clear? If this is my present value of liability, think and say, will there be any change over here? Yes, obviously. Your liabilities and all stuff will be changed. So will I need to do anything further? Oh yeah, we can go ahead. So yeah, if they have asked us with this, we will be just showing up till here, and yeah, we'll be just changing the situation from here also. Cool. Are you fine with it? Yes. I hope we are very clear with it. Yeah. So over here, now my opening liability will be changed because my liability has increased. So how much it has increased? I will increase it over here. Was 10,656, something like that. Yeah. So something like that. So what was my liability now, guys? What was my liability? Oh, I'm just trying to make it easy. So now my liability is 175.28. 175.28. So over here, it will be 175.28. If you take up the total. Now what to be done? Simple. What's simple? First year, what will do? 2005. Ma'am, I'll pay 32,000 first year. What will be my remaining liability? Please reduce it. 175.28 minus 32,000 on day 1. If I paid my liability, my remaining will be 138,528. On that only I'll pay the interest. How much interest I'll pay? 5%. 5%. So I get 6,926. And then eventually my closing liability will be how much? 145,454. Then from 2006, 2007 and all things will be same, which is something which I'll not do it right now. Maybe you can understand it. 145,454. Again 32,000 you will pay it on day 1. Again you will get the balance minus 32,000. It's 113,454. Again on that 5% interest you will charge. It's like 572. And if you take up the total, it's 119,127. So this is something we have to do it for 2007, 2008, 2009 and 2010, I think. And yeah, 1 year, 2 year, 3 year, 4 year, 5 year, 6 year. Yeah, and it is going to go on. So yes, things will be same. Yeah, just give me a minute. 1 year, 2 year, 3 year, 4 year, 5 year. Yeah, so Baba, you can do it. Yeah, it's very easy. It's very easy. It will go on with the same things. So yeah, if you want to see the way they have answered it is very simple. You can check on with the ACCA resources also, and yeah, you will get to know. Am I very clear? Yeah, I know some of the students will be feeling very much doubt in this question, so I really want you all to please refer this video for at least like once or twice to get the conceptual clarity. Okay, I hope you are fine with it. Yeah, so after doing a very good question, let's have a break of like 2 minutes or 5 minutes and we'll be resuming it back. Thank you. So yes, students, welcome back all of you all. So yeah, we have like covered important questions for sure from the lease concepts also, and I hope that you guys will be feeling this very much relevant as well as important. Yeah, so sure, give me a minute. I really wish this video is helpful for you all. And yeah, now we'll be just going ahead with the concepts of lessor, and perspectively the concept of lessor is also very easy. So yeah, if you wish, I'm having one more question for modification, but is very similar to that. So yeah, you can just take up for that. So what is basically, okay, I'll take up one question from modification also. So that is known as modification. So what is modification for the first instance? Okay, so what's modification? For example, just think, okay, I was first of all having a property on which I have taken it on rent. Okay, let's say I have taken up a property on lease which is 1000 square meter, but afterwards I got to know, because of the financial crunches, I thought like I don't need so much of area, I wanted half only. So if you want the area half or maybe something modification, you can tell your lessor that okay baba, I don't want to pay so much of lease because I don't want to occupy the whole property, I want just half. If you want just half, guys, so will it not affect your lease payments? Yeah, it will affect, ma'am. Then are you mad to pay exactly the same lease that you were paying prior? Oh, then there will be certain modifications. So considering that modifications into mind, let us understand how to be done. Okay, so yeah, so lease modification means a change in the scope of lease, So yeah, I'll be just going ahead with the concept of modification. So yeah, students, when it comes with the concept of lease, just give me a minute. Okay, so let's understand again the concept of modification. Okay, it says a change in the scope of lease, that is on the consideration of lease that was not the part of the original terms and conditions. So what is something changed? What you thought initially and what is actually happening, if there is any change. What you entered into with the actual terms that you were using like 1000 square feet, but now if it has changed, in the meantime you need to change the things. For example, over here, a lease modification is adding or terminating any right of the use. If I want to add or terminate any other property, it's a change in the lease term. Maybe the lessee must account the lease modification as a separate lease if modification increases. Yeah, first point, if modification increases the scope of lease by adding the right to use one more property. Means, for example, if I told first of all I want only one property as rental, now I want more than one, so maybe that is something adding the lease. Okay, up next if you read it, okay, then second, if you have a change in what, change in the consideration by increasing what, the prices after adjusting some new contract. So we have to treat the modification of the lease as a separate lease. So if it's a separate lease, what should be done? First of all, recalculate the lease liability, yes, an ROU asset, to affect any reduction or increase in the scope. And if anything is there, put that change in the P&L account. If you put it in the P&L account, what's the next? Then remeasure the lease liability, because we have some discounting rate, that is the incremental rate, and considering that and readjust it in the step 1 and then get the corresponding results. If I'll explain you like this, you'll not understand. So for that, guys, we have a question, and yeah, we can go ahead with the questions and we'll understand it for sure. So what is modification, by the way? Like, what do I understand with the word modification? It's simple and clear. It's very simple and clear that if there is any change what you estimated initially, what you entered the contract, and now if you want any changes to happen, that is known as the changes in modification. Okay, that is, let's see. On 1st Jan 2023, the company entered into a lease contract to lease 2 floors out of 10 floors. Okay, only they wanted to enter 2 floors out of 10 storage. The lease is for the period of 10 years, and you have to pay an annual rental of 1 lakh payable at the arrears, not at the year end, it's arrears. Okay, fine, cool. Means I want to make the payments, so that's for sure. It's very clear till here. Yeah, the question is very clear. Yeah, we could get the concept. Up next, what they have given, the incremental borrowing rate is 6% and the depreciation is for 10 years. Okay, because my life is also for 10 years. Cool. On the initial recognition, they have already given us, on the day 1 they have initially recognized the ROU asset and the lease liability at 73,600. It's pretty, na? They have already given us, okay, this becomes my lease liability and this becomes my asset. Cool. What is the date? On 1st Jan 20x3. Now what happened? On 1st Jan 20x7, the lease liability is given this and the carrying amount of ROU asset is given this. So why is this date given? Okay, maybe there will be certain modification after this date. So what's the date? 2003, 2004, 2005, 2006. Okay, so 4 years has already been over. Now it's the 5th year start where there is certain changes. Life is 10 years and 5th year is start. So ma'am, remaining 6 periods. Okay, your liability is this much and your asset is this. Okay, we got the amount they have already given us. On this date, on 1st Jan 20x7, the company arranged with the lessor to continue the lease for just 1 floor. Initially it was a lease of 2 floors, now they want just 1 floor. What do you normally think? Ma'am, if I have a reduction in floor, if it was 2 floors, your liability was this. If it's 1 floor, it should be eventually half. It should be eventually half, or whatever the liability is. For example, if I'm telling you it should be eventually half, can you tell me on that date what should be my lease liability if it's half? Oh, lease liability for me, if it's 49,1722, it should be half. Means I think like it should be basically how much, guys? It should be dollar this much only. Like the lease liability is 491,772. If it's half, if you divide it by 2, 491,722. If I divide it by 2, am I getting 245,861? Yeah, 245,861. Yeah, it should be this much liability, and the ROU asset should be what? ROU asset should be also half. 441,600 divided it by 2. If I divide it by 2, what is my amount, guys? Oh, then ma'am, your amount should be 220,800. Yeah, 220,800 dollars. Okay. Is there any difference? Yeah, that is something we know. They have written any difference is to go in P&L account. Cool. But now what happened? On that day, we know one concept, that when you have leased 2 floors, Baba, your lease payments was how much? My lease payment was annual rental of 1 lakh. Okay, my rentals was 1 lakh. But now if it is half, only 1 floor, eventually my rental should be 50k only. But they have given it's not the situation. Whatever it is, eventually it's not the same. Reducing the office space, lease by 50%. The lease rentals for the remaining 6 periods are, oh, it's 55k for each year. It's not 50, it's 55k. And the discounting rates has increased to 7%. Oh, means now you have a liability which is more, and this is for your remaining period. Okay, so can I understand what will be my liability because of the revised thing? Yeah, because of the revised plan, or I can say because of the modification. Yeah, your liability has been changed. Yeah, your rentals are how much, guys? My rentals turns around now to be how much? My rentals will be only 55,000 per annum, and if I'm having for 6 years, and they have given us the formula, so 55,000 into 4.767. If I do it, tell me now, what eventually are you getting your liability? That's 55,000 into 4.767. Are you getting like 262,185? Okay, so because of your revised plan, you eventually over here the modification thing, your lease liability as per the new terms, needs to be 262,185. But if you see this, if I'm taking half, 50%, your liability should not be this much. If I'm taking half, if I take up my original liability and divide, and if I divide it by 50%, this becomes my liability, which is 24861. Hey, now what happened? Because of the new thing, is your liability increased? Yes ma'am, because of the new thing my liability is increased. Increased by how much? Eventually your liability should be this much if you have the original plan. So you will write it, because of the original plan, your lease liability would have been this much, 245,861. But because of the revised or because of the modified plan, my lease liability turned around to be how much, guys? Yeah, it is 262,185. Means what? Means your liability has increased. Your lease liability, because we have to pay now what? The modified thing, right? Your lease liability has increased by how much? Increased by how much, guys? Yeah, perfect. 262,185 minus 245,861, which turns up to me at the rate of dollar. I hope you're getting it. 16,324. Now, if your liability has increased, what will you pass an entry for? Ma'am, if I want to increase my liability will be credit and something to debit here. Means 2 lease liability will be how much? 16,324. Something to debit will be nothing other than ROU. Is it account debit? I hope you getting it. Yes, clear. Now this is what we have to show. That's all. So this is the meaning of modification. We need to compare it with the original things, and that's all. With these, we have completed a lot of concepts about. We have completed a lot of concepts about the lessees accounting. Up next, we have lessors accounting also. So what is lessors accounting? So when I go ahead with the lessors accounting, I need to bifurcate between the operating lease and the finance lease. Operating lease means the lessor wants to use the asset for himself also. It's not just for the purpose of lease only he has given up the asset. No, he himself also wants to use it. Okay, so he'll use it for himself also. And whatever the lease rentals he'll get it, he will bifurcate in the SLM basis. Yeah, that is something which is very common to understand. But then what is the finance lease, which is different? Okay, so when I just say up the finance lease, okay, I'll just open up the PowerPoint so that I can just explain you more. Yeah, I'll just try to insert things. Yeah, okay, now let us understand with the concept of lessors accounting. Okay, lessors accounting. Okay, when I am saying you lessors accounting, it's also bifurcated into two parts. There is operating lease. Operating lease is very common lease in which the lessor do not want to transfer the asset. The lessor is not interested to transfer the asset. The lessor want to use the asset for himself. So normally what he'll be doing? He'll be giving the asset on lease for not a substantial period. That means lesser than 50% of the life of the asset. So whatever the lease rentals he'll get it, he'll do it in SLM basis over the period of time, over the period of lease. Yeah, simple. But he wants the asset, so he will not de-recognize the asset. But then when it is a finance lease, the lessor, for example, the life of the asset was 10 years. For 9 years, if I have given on lease, that means for maximum portion you have given him on the lease. That means now when it is a finance lease, you have to de-recognize your asset. That means if I have to de-recognize my asset, I don't want this asset in my books of accounts. Yes. Means you don't want this in the books of accounts? Yeah, don't want. But ma'am, some of the other thing I want, na? Yes. The rentals that we are getting it. The rentals that we get it. Yes, guys. The lease rentals that I get it. I have to record it in my books of accounts. And what's the name that I'm getting it? Yes. It's nothing other than net investments. But I normally considered it as a receivables. Yes, it's the lease receivables, because that is something I'll get it for period and period, for long periods. Okay, very simple till here, very simple. Okay, when I go ahead with the finance lease, students, my lessor needs something as a rent. So for first, what is lessee obliged to pay? So ma'am, lessee is going to pay first of all the lease rentals every year, plus this is what I wanted to go ahead. The lessee has to pay the minimum guaranteed value. So GRV, the guaranteed residual value. For example, I have explained you in the class also, the students knows that. For example, I have given up a lease rental asset to you. Okay, for 9 years. The life is 10 years. After 9 years, when you give me the asset, the halat of the asset, the condition of the asset will be worst. I know. It will be not in the position that I can lease it for 1 more year to somebody else. And I know, maybe after the end of 9 years, for example, after the end of 9 years, if I sell for the 10th year, last year, in the market, if I sell, I'll get the residual value minimum, like I should get like normally I should get how much? Normally I should get $5,000. But I know, because how the bad your condition of usage is, for example, I will not get something more than $1,000. But I want $5,000, I want. So what I'll do, I will ask $4,000 guarantee from you. You can give the guarantee, maybe on your behalf somebody else can also give the guarantee. So that is known as the guaranteed value. So for the lessee, the lease rentals are MLP. Minimum lease payment is equal to lease rentals plus GRV. But what will lessor get? Lessor will get lease rentals plus GRV, which is something lessee is going to pay, plus UGRV, that is unguaranteed residual value, which will be like this 1,000, which somebody else will be paying. Yeah. If I get these figures, guys, try to understand it. Please try to understand it. If I get these figures raw, means without the discounting factor, like that is without discounting factor, means raw means something without any discounting, so it is normal. So that is known as GI, gross investment. But if I apply on that the discounting factor, if I applied, the present value of gross investment is equal to net investments. Yeah, and the difference between these is nothing other than the discounting factor, which is nothing other than known as interest. So that is known as unearned finance income, which I'm so sure my students knows this very well. Yeah, yes students, we know this. Yes, cool. Okay, so with these concepts, do we want to solve one question? Yeah, just give me a minute. I have made up the question. Yeah, we can solve this. And yeah, the plan which I had it, I took a lot of time for considering this chapter only, and we'll just wrap it fast, and we can go ahead with IAS 19 also. Yeah, so yes, without any further delay, yeah, let me just open up the Excel for you all. Just give me 1 minute, students. Yeah, so students, this chapter is Important means like I don't know why the students are facing this hard, but yeah, it's eventually not so difficult. Okay, it's something which is manageable, and I really want you guys to understand it in a better way. Yeah, so I'm just opening it up, the topic of leases for us. Okay, yeah, it's like give me a minute. Okay. I have already shared a thing with you. Maybe that is visible or not. I don't know. Okay, I'll just frame the question for us, because the questions I told you, it's not so much there in the notes, but I have prepared it, so I'll just frame the question for us. Okay, so let's say I'm telling the lease rentals are is equal to 1 lakhs per annum. Okay, per annum, and this is what the lessor has told them. Okay, the lease rentals are this much. Let's say the discounting factor in the question is given 8%, and the lease term is equal to 5 years. Okay. Later on, the company has told that the minimum guaranteed value that is basically the company has to pay is basically UG&PG is provided in the question at the rate of 25,000 per annum. Okay, so what are we going to do it? Simple, students, we are going to get the discounting factors for sure. If I get the discounting factors, what will be the amount? How will I get the discounting factor? So yes, students, if you can see this, yeah, this becomes your solution. This becomes a solution. Means your discounting factor, your years and all will be this. So basically, if I'm taking up 1 lakh, 1 lakh, 1 lakh, and if I'm discounting it with 8%, will I get this? Please check it. Please check it and give me the answer. Am I getting this as a present value? Because at the year end, I have to pay 125. I have to pay 125. Why? I have to pay 125, as these 25 will also be paid. So yes, if I take up the total, it's by 25, and if I take up all the stuff's present value, I'm getting 416,286. Yes. So if I got this, now what will be first of all my situation to write? And if I'm telling you, let's say in the question, if I told you that on the day one, the expense which the lessor has to book it, let's say, or whatever it is, on day one, if I'm telling you that please record it in the books of accounts. So now the lessor has to record in its financial statements in the asset side, the over here the lease receivables of how much, guys? Now this becomes your lease receivables, which is 416,286. Now this becomes your lease receivables, and every time whenever you get the lease, whenever I receive the lease, for example year end, okay, I have to reduce it from my lease receivables. That's all. I have to reduce it every now and then. For example, if I'm taking up the opening situation, and out of that, if I'm getting, let's say, interest of, let's say, 8% is there, minus actually I'll receive, actually how much I'll receive, let's say 1 lakh. for the first year. You remember that column which we used to make it? Yeah, let me make the column also for us. I'll add it one more slide and I'll insert that column. Let's say 5 or 6 years. Okay, I'm just booking it over here so that it becomes easy. My lease present value is this 416 286. Okay, so my opening receivables is this much, 416 and what it was, 826 something like that. Yeah, 416 286. Yeah, so 286. On that interest I will get at the rate of what percentage? Yes, yeah, you can do one thing. Yeah, I can just, yeah, what I can do is I'll just not take it up over here, I can take it up over here only, 416 286. So my opening receivables turns around to be 416 and 286. On that, interest at the rate of 8% is something you have to charge it. If you add on 8%, 416 286 into 8%, you get something like 33302. And actually, what is the lease that you are going to receive it? So that much receivables is reduced. So what am I actually going to receive it? Every year, 1 lakh, 1 lakh, 1 lakh I'm going to receive it. For year 1 lakh I'm going to receive it. So if you reduce it, definitely you get the closing receivables. If you get the closing receivables, you get the amount. So if you add on 416286 plus that minus 1 lakh, definitely you get some amount like 416286 plus 8% minus. Please do it in your calcs, because I am doing it 349588. Now this becomes the next year's opening. So 349588 plus get 8%. I am not writing everything. Plus 8% minus 1 lakh. Are you getting something like 277,555? Again on that, if you add 8%, which becomes the opening for the next year. See, first year you have to pay 1 lakh. Second year also you have to pay 1 lakh. Third year also you have to pay 1 lakh. Guys, fourth year also 1 lakh, but fifth year it's 125 because you have to pay the you have to receive the unguaranteed residual value also. So fourth year and fifth year, 1 lakh and 1 lakh 25. So if you do this, 277,555 plus 8% minus 1 lakh if you receive it. So your liability will be 199,759, which becomes the opening for the next year. So if on that again 8% interest I'll charge it and minus 1 lakh, definitely I get 115,740. Again on that, if I'm taking 8% and reducing 1,25,000, am I getting something which is 0? So yeah, students, why am I doing so? For you to guys understand it. Yes, so do it fast and it is very simple. Okay, so with these I didn't want it to like stretch up so much with this chapter, but yeah, it eventually took a lot of time, but then it's cool. So with these students I have completed what the agenda I wanted to complete. See, I have not taken up sales and lease back, but that is something which you can understand it on your own. Like, it's not so difficult also. Yeah, because what my students told, I have taken that as the focus first, which I got the message on Telegram. So we did that. Okay. Now, up next, students, up next, we have a very beautiful standard, which turns around to be one of my favorite standard, which I always tell my students also. That is IS 90. So what's that? Yes, that's employee benefit. Okay, so we are going to understand the employee benefits in just 2 seconds. So yeah, you can just take a breather. Yeah, because already it's there in the YouTube, so you can take whatever time you want to take the break, and yeah, we can study it for sure. So yeah, students, why now this chapter becomes important? Why this chapter becomes important? And why am I focusing, yeah, that this chapter we need to take the revision for? Because students, when we did FR, or maybe those students who have taken up the exemptions, guys, this standard you would have not studied. And something which is not there in the something which is not there in your course of skill level becomes important in your P level. Yeah, so true, so true, so true. Okay, with this overview, we need to understand why are we going to understand something about employee benefit. Okay, first of all, what is employee benefit and what is this standard relevant about? What are they talking it about? and what is the relevance of employee benefit. Guys, I'll be taking up the most important topics in this chapter as and when the time permits, but definitely I'll be not leaving any of the topics for sure. Okay, I think it's visible, the PPT. Cool. I've just made it open. Yeah, just let me make it more bigger so you guys can understand it. Okay, so this is my employee benefit, that is IAS employee benefit, IAS 19, that is employee benefit. So I'll just inform you guys about some topics. Okay, that is IAS 19, which talks about employee benefit. When I take up this standard, we have two words, that is employee and benefit. So this gives me a picture that if I'm giving means who am I? This chapter or this standard is to be learnt from the perspective of the entity or any organization which has to give some or the other benefits to the employees. Because if I am the entity and I want to give some benefits to my employees, that becomes my expenditure. Just imagine, if it's a manufacturing industry, so much of expenses are basically for direct material, direct labor, direct overheads, everything. But if it's a service industry, oh my god, ma'am, I have to pay so much to my employees. Yes, this becomes your very much higher focus attention on your expenditure, right? Yes. So this is a huge expenditure. That the company has to incur. Something which is huge becomes the source of manipulation. So what I will do is, I will make the expenditure in such a phase that whatever is relevant in the current year is to be booked in current year. Means over here, the employees will be getting the benefit which will be exactly the day on which they need to get benefit. I will book the expenditure that way. For example, my year ends on 31st December 28th, let's say 22. What happened? Okay, we know the month of December's salary is generally credited in the next year, maybe in Jan. Let's say December month salary, what should I do? Ma'am, maybe the salary is credited in the next month. We will do cash basis. We will book the entry also in Jan. No, it's not allowed. In this December month, my employee gave me services. So, on the accrual basis also, I have to book the expenditure of salary in the month in which the services are rendered, right? So, I cannot go next year. Otherwise, I can make some unnecessary things. I will not book in December. So, my profit will be more. In the next year, ma'am, I will book. No, not allowed. So what entry can I pass if I have made the payment in next year? Yeah, ma'am, it's very simple. We can do salary account debit to salary payable. Yeah, we have this concept of payable. Yeah, we can credit a payable. We can create a liability. And in the next year, with this balance is there, if I'm going to make the payment, what I'll do? Ma'am, salary payable account debit to cash. I can book like that way. Yeah, I can settle my entries for sure. And this is very simple. This is, ma'am, which we know. So yes, guys, the IAS 19 has came up with this perspective only, that whenever the employee gives me services, I have to book the expenditure that point of time only. I cannot defer it. For the next year to next year to next year. No, this is something which we cannot do it. I'll just insert a lot of slide here. Okay. So a lot of things we need to understand it in this chapter. So for the first, I'm not going into the details of what it is, but yeah, from the crux of the exam, IAS 19, we know that the employee benefit is bifurcated into what parts, guys? Yeah, employee benefit is bifurcated into 4 parts. What is it? 4 parts? Yeah, some benefits, right? Short-term benefit, yeah, long-term benefit, ma'am, post-employment benefit, and termination benefit. Okay, now if I just cut short the words, what is known as short-term benefits? For example, this is my current year, from 1st Jan 2022 till 31st 12 2023. If this is a period and if some expenditure has occurred in this period, like the salary and etc., and if I make the payment, if I make the payment in the next year, that means over here, this is the word. Okay, this is the word. This year, 31st December 2023, within a period of 12 months, if I settle my liability within a period of 12 months, after completing the reporting period, if I settle my liabilities within the period of 12 months, yes, that is known as short term. Just give me a minute. I have one chat. Just give me a minute. I just need to reply. Okay, we are having a live chat. Yeah. Yeah, I just need to update my student also that yeah, we have started up with this. So a lot of students have messaged me that okay, IS 19 ma'am, we want to attend it as a fast and quick revision. So yeah, good morning, Ziba ma'am. Yeah, so you there? Yeah, Ziba ma'am, I have already joined in. Yeah, so yes, Ziba ma'am, we have already started it, and I think you are live with us. So yeah, you can message me anytime in the chat. So yeah, on the live chat, okay, in the live chat that is basically on the YouTube. Okay, so I'm there with you. Thank you. So yeah, we are having Ziba ma'am with us. So cool. So yeah, Ziba ma'am, I am online with the things in my phone also. So yeah, I'm just wondering it of things. Maybe I'll not shut up my my voice will be very less, but then I am there for sure. It's there. Okay, it's there. Cool. Like whatever you're having doubts, we can go ahead with that. Okay. So yes, students. Over here, short term means if I want to settle it within a period of 12 months. Long term means, yeah, exactly this is the scenario. But, okay, this is my term. This is my year 1. That is ending till 31st 12/23. From 1 Jan 22 till 20. Okay, I made it 22. I'm so sorry, huh? It's 23. Okay, it's 1 year only. Yeah, it's 1 year. If my service is for 1 year, but the settlement didn't happen in the current year. Yeah. But the settlement didn't happen in the next year also. It went more than that. Means, this is my current year period. If the settlement happens within a period of 12 months, from the end of the reporting months, it is known as short term. But if it takes more than 12 months, it's known as long term. So when the concept of long term comes into picture now, students, we have the concept of discounting factor. For example, I'm taking up the long term thing. Just imagine, okay. For example, I always give in the class also I've given like some examples that you have to make the payment. You have to make, let's say I want to make the payment of $80,000, okay. And this is payment to, or the salary or whatever, it's salary I want to pay. But I have paid not in the current year. This is my current year, the reporting year, the reporting period. I need to make in this year. But what I did, I made this year. Okay. And the discounting rate is 10%. So I have to pull it back by 10%. So what I did it, 80,000 divided by 1.1. I got what? Okay. So my present value is equal to 80,000 divided by 1.1. It is 72,727. So what will be my first entry for the year end? Year end, my first entry will be salary account debit to salary payable. Amount will be 72,727. This goes in P&L account. This goes, payable goes in my liability portion. Yeah, same. But what I have to do again? Ma'am, next year, na, I'm having the chats, like, yeah, figuring it out. Next year, on that, next year, ma'am, I have to add interest at the rate of 10%. Yes. So, interest account debit, it goes in P&L account, 10%. So, 7272 to salary payable, liability. So, my salary payables total amount is 80K. Yes. So, if you take up the total of salary payable, yeah, this salary payable plus this salary payable, it becomes total of 80K. Total 80K. So, now in the next year when I actually make the payment, what will be my entry, guys? Yes, my entry will be very simple. Salary payable account debit of 80K to, if I want to pay, to cash, yeah, bank, whatever it is, I'll make the payment. That's all. Clear? Very, very simple. Yeah, very simple. Yeah, okay. I hope it's very clear. So that is known as basically long-term payments. Yeah, I'm not going ahead because this in this chapter or in this standard, when I talk to you about IAS 19, the most important concept is post-employment benefit. So before I go to post-employment benefit, let me explain you what is termination benefit. If I told my employee, you are fired, out, maybe I need to give some compensation. He'll not be happy. Maybe the employee came and told me, ma'am, I want VRS, I want voluntary retirement. Okay, so maybe he's going out. That is termination. But there is a difference between termination and post-employment. So what is post-employment? Now this becomes very important. Post-employment. Post-employment is what, guys? If I'm talking to you about post-employment, it is like once you are done with the employment, means my employment period, let's say I was being employed till the age of 65, and once my employment is over, you know, after employment also I get some of the other benefits. Maybe I'll be getting some thing which is known as gratuity. I'll get some PF, I'll get some pension, I'll get other things also, right? I get a lot of things. So basically these are my post-employment benefits. So in the concept now, guys, we have post-employment benefit. It's divided into two parts. It's DCP and DBP. What's that? Defined contribution plan. Yeah, my students know this very well. And defined benefit plan. So when I say defined contribution plan, yeah, ma'am, yeah, Zibam is there, okay. So when it's defined contribution plan, now students, what is contribution? For example, the company, the company cuts the PF, the provident fund. Yeah, from the salary of the employee, we have to cut some or the other portion of PF. For example, if I'm deducting PF, somewhere is there tomorrow? Okay, I'm having a chat. Yeah, just give me a minute. Can you? So basically we are having some concepts and tests and also. Yeah, cool. Yeah. So yeah, what is defined contribution plan, guys? Yeah, when I go ahead with the defined contribution plan, it is something like contribution to be made where contribution is to be made towards the PF department. So over here now, the company has to do what? The company has to cut some portion of the salary of the employee and they have to deposit to some departments. If I deposit to some departments, my liability will be over as an employer. As an employer, my liability will be over if I deposited there and there itself. So when it is defined contribution plan, the employer's responsibility is over. So the employer will be booking an expenditure as and when he is contributing. That's all. Simple. Very, very simple. But when it comes to defined benefit plan, it goes beyond. Why beyond? it's something like gratuity, which I have explained to my students. It's something like gratuity, means you have to make the payments at the end of the life. For example, I told my employee, you be in the service period for let's say 5 years and I'll give you gratuity. Just give me 1 minute. Okay, I'll give you gratuity. Yeah, I told them. So let's say I told them you be at the 5 years in my employment. So what do you think, at the end of 5th year, if I have to make payments, if I have to pay after 5 years, so should I book the expenditure at the 5th year? No, you cannot book the expenditure only at the 5th year. Why? Because see, this is very important. Defined benefit plan is important, and here in IAS 30, basically over here when I am talking to you about IAS 19, I am expecting you to know this part, okay? And yeah, we'll be focusing on this part more. Okay, so if I have to pay something about after 5 years, so it is not proper to book an expenditure only at the 5th year end. It's very important to book the expenditure over a period of 5 years. So you'll say, ma'am, it's very easy. For example, if I need to make the payment after 5 years, let's say 4 lakhs. So what will I do, ma'am? Every year 1, 2, 3, 4, 5, I'll divide it by 5 years and every year 80k I'll book. Is it so easy? No. Ma'am, there is a function of discounting factor. Yes, there is a concept of discounting factor. So yeah, if there is a concept of discounting factor, it is going to influence us very high. So ma'am, then what to be done? Can we have some examples for that? See students, it's basically these type of examples are not there in the material for sure. But yeah, if I have taken up and we have prepared it, so definitely we'll be moving ahead with the concept also. And this is what I really want you guys to understand it. Okay, so let us understand it very easily. Yeah, very easily we'll understand it, and I'll try to explain you in the best possible way, that only after doing one question, it will be at your hand. Okay, cool. Chalo, now I am just showing you with the Excel which we have prepared it. Wait a minute, it's there. Yeah, I think you are able to see this. A lot of stuff I have written it. So that is basically known as defined benefit plan. Means, what is defined benefit plan now? For example, some of the employees working in my company, I told him that you will be getting gratuity after 5 years, for example, over here. And that person's gratuity is calculated how? For example, gratuity is calculated like this. What is last year's salary drawn into the gratuity percentage into 5 years? Okay, so this is the gratuity. Last drawn salary means after 5 years, what is your salary, that amount into 5 years into some percentage of gratuity. What have they given as the question? Day 1 salary is 10 lakhs per annum. Means if I work for whole 1 year, I will get 10 lakhs. And my salary, I'm the employer, right? For example, if some Mr. X salary, I will tell him, you guys get an increment of 10% every year. And the life is 5 years. So what do you think? What will be his last drawn salary at the end of 5th year? Will it be 10 lakhs? No ma'am, it will not be 10 lakhs. He will be getting a 10% increment every year. So how much will he get increment? Yeah. So people will do what, I know the mistake what people do. Yeah, I'm just expanding it more. Yeah. So what people will do, ma'am, year 1 salary, they'll take 10 lakhs. No. What they'll do, they'll add increment in the first year also. No, first year there is no increment. First year, guys, there is no increment. This is my first year's end. From second year's end, there is an increment of 10%. Okay, for second year's end, what will be my salary? Please increase by 10%. Okay, so 10 lakhs. If you increase by 10%, guys, you get 1100, comma. Yeah. Then what will be the salary for the third year end? Yeah, for third year end, my salary turns around to be, again, if I'm adding 10% on that, 1210. Yeah, cool. Yes, guys, what is the salary for fourth year end? Okay, if I'm adding again 10% on that, am I getting 133100? Yeah. And the last drawn salary, last 5th year, 5th year my salary turns around to be 1464100. Yes. So people make mistake, they add up here also 10%, which I really don't want you guys to do it. Okay. So my 5th year salary is this much. Okay, this is something I understood it. Cool. 144,160. Okay. Rest all I can just make it light. Okay, so 5th year is this. So my last drawn salary turns around to be 146,400. Yeah. So what is the gratuity, guys? Last drawn salary into 1% of gratuity into 5 years I completed. So if I do it, last drawn salary into 5 years into 1%. So my expectations are that I have to pay, the company has to pay the gratuity of 73,205 after 5th year. After 5th year. So if you can see, after 5th year I have to pay 73,205. I'll take the round off of 73,205, okay, or 200, okay. And if I have to pay 73,200 after 5 years, 1 year, 2 year, 3 year, 4 year, 5 year. So every year how much you have to pay? So ma'am, every year I have to book some or the other expenses. So can I divide it by a number of years? Yeah, I can divide it. So if I divide it by number of 5 years, so every year I am going to contribute how much? Nearly 146,440. This will be the exact amount. So if I every time just book this way, guys. So if I get the total, will I get this total? Yes ma'am, 73,200. So every year this much. But students, you need to know this is without any sort of discounting factor. Means just imagine, I'm trying to explain you over here. I'll just add on things with you. Yeah, over here, think like I am having my wedding after 5 years, okay. Like this is 1 year, 2 year, 3 year, 4 year, 5 year. After 5th year, I have to pay to the wedding person 73,200, okay, for example. So what I thought, acha, after 5 years, this much will be my expenditure. So let me plan an asset. Let me plan an asset such that, let me plan a fixed deposit such that every year if I contribute some X amount, year 1 I will contribute, year 2 I will contribute, year 3, year 4, year 5. Every year if I pay some or the other thing, definitely by the end of 5th year I should get 73,200. So every year what X amount you want to invest, so that every year you can get by the end 14,640, 14,640, 14,640, 14,640 and 14,640. So you have to contribute every year end. For example, over here, if you can see, I'll just cancel it over here for you to understand it. For example, at the end of 5th year, you should get 73,205. So over here, sitting at the 5th year end, 4th year end, 3rd year end, 2nd year end and 1st year end, how much you will contribute X amount, so that after getting interest, you get 14,641. Because the question is given, like you have to put it payable at the end. So what amount of X amount I will invest? So I have to know. The discounting factor is 10%. Means just imagine, if you're sitting at the 5th year, yeah, you will not get any interest. So how much you have to contribute it? Yes, exactly. I have to contribute how much, guys? 14,641 divided by 1. Because what I'll get interest, I'll get ma'am no interest. But when I'm sitting at the 4th year end, ma'am, I'll get the interest for 1 year. Means I'll get 1.1 interest. So what is your X amount? Ma'am, 14,641 divided by 1.1. Yes. 3rd year, what will I get, guys? Guys, try to please understand it. Okay, I'll make one thing with blue color. So yeah. So how much I'll get interest in this year? Ma'am, 1 year I'll get the interest. Ma'am, 2 years I'll get the interest. Yeah, for 2 years. So 14641 divided by 1.1. 2 years interest I'll get. Over here, how much interest? Year 1, year 2, year 3. In 3 years interest I'll get. So 14,641 divided by 3 years. 1, 2 and 3. And sitting at the 1st year, if I invest X amount on the day 1 end, okay, year end, 1st year's end, if I invest it, I get an interest for 4 years. Yes. I get the interest for 4 years, that is for year 1, year 2, year 3 and year 4. So we have to divide it by 4 years. 1, 2, 3, 4. So I get this much as my present value. So if you see this, first year's end, your liability, the opening liability will be anything? No ma'am. End, because day 1 I have not invested anything, nothing opening. So year end it will be my 10,000. So that becomes my closing liability as it is. And I'll not show you one thing very beautiful. I have always made this way. This becomes my closing, next year it becomes my opening. So on that again 10% interest I'll add it. And in the current year I will contribute something more. How much more? 11,000 in some fund. So my closing becomes this. Yes, which becomes the opening for the next year. Again you have to pay interest at the rate of 10%. Copy the same formula. Again, what is the current year's situation? Which is 121. Yeah, you get it? The closing? Yeah. If you can make up the total, it will be this. Again on the 10% interest, if I add it, I'll get the remaining situation, that is the valuation. If I again take up the total, I'll get exactly what I want. Again 10%. Again get the last answer. Baba, we will get exactly what we want at the end. 73,205. 73,205. So how it is coming, guys? First try to understand. You want an expenditure, let's say after 5 years. After 5 years you want this much. So please invest every year. Sitting at the first year and invested for like 1 year, 2 year, 3 year, 4 year. So 4 years interest you get it. So what is your present value for today? That way. Book it individually. Second year and year. If you invested for 1 year, 2 year, 3 year. So for 3 interest you get. So what is your present value today? Sitting at the third year end for 2 years, for 4th year and for 5th year. So what's the present value? Because you need to get 2 years interest. 4th year end, for 1 year if I get it, what is 1 interest? 5th year end, nothing you will get interest. So what's the present value? Present value. So I get the present values. If I get these as a present values, if I invest it, I get this much amount to make a contribution for. So then I can make a payment. So yeah, for then I can make a payment. So this every year, if I'm contributing, that is known as my current service cost. That is known as my current service cost. So what I do it, and this becomes my obligation at the year end. So there is a liability. So cost debit to liability. Yeah, expense debit to liability. Then what is the liability and the expense going to root through? If it's a cost which I have to incur in the current year, that is known as current service cost debit to my liability. So what's the liability? To defined benefit obligation. It's my defined benefit. It's benefit plan. Defined benefit obligation as it is a liability. So every year I have to pass this entry. Can you see? Current service cost account debit to defined benefit obligation, and on that interest I will charge at the rate of 10%. Again contribution, again interest, again contribution, again interest, again contribution. So this is something which my students knows, and I know that you guys must be knowing that. Yeah, I'll show you once again. This is my current service cost, CSC, current service cost, and this is on that interest you are getting. So current service cost debit to DBO, defined benefit obligation. On that interest I have to add it to DBO. Again next year contribution I have to do. So CSC to DBO, again interest to DBO, and it goes on, guys. It goes on and on till the time it is zero. Cool? Yes? Yeah, this is something which I just wanted to show you all. Okay. Up next we have a concept of actuarial. Yes. So when it is defined benefit plan, somewhere I have to book an obligation, and this is what I did. I was investing somewhere. Yeah. So what I used to do, ma'am, we have to make an obligation. In front of that we have to make one asset. So there will be one liability, there will be one asset, right? If there is some liability, every year the liability you have to increase it, and at the end you have to settle the liability. Same way in the asset also, somewhere I am having the asset and I have been increasing the asset, and at the end of the settlement I will be utilizing that asset and settling it off my liability. So by the end of the year, what I will do, at the end of the 5th year, when I want to settle my liability, I will not go ahead and say, Ketcha, ma'am, that liability, we need to settle it with cash. No, you have created one asset for that asset, for that settlement of liability. Utilize that asset and settle your liability. So this is what is the concept of defined benefit plan. Now, if you understand it, in this defined benefit plan, if I'm just copying it and pasting it over here, try to get it, try to understand it, what I'm telling you, okay? If this is salary, that is 10% for sure, 10 lakhs. It's an increment of 10%. The company thinks whether every employee will get 10%. I'm not sure. Maybe in the next year, some people don't work well. So maybe they'll get an increment of only 2%. Some works very well, so some will get 12% increment. So that can be changed. Similarly, today the discounting factor is 10%. Maybe next year it can be 12%, maybe next year it can be 8%. It can change over the period of 5 years. So things which can change over a period of 5 years is known as actuarial changes. So there is actuarial assumptions. So I thought in my company there are 100 employees who will be getting the gratuity, but out of which some can leave the company early, some can be there. So even that can be changed. So if there is any actuarial change which goes on changing, and if there is any gains and loss because of the actuarial thing, because of actuarial assumption, if I am having any gains or loss, what will I debit? Should I put this gains and loss into my P&L account? No. You remember the concept of IAS 16? If anything which is not pakka changed, it changes on and on, you can create a reserve. That is in OCI, I have to create it. Yes guys, this is the most important. Like if there is any actuarial change, you can book the change directly through OCI and not through P&L account. For example, I initially thought like there will be 100 employees, and to pay 100 employees, I have to pay the $7,000 as a gratuity. But let's say 5 employees left the company. And because of which now my liability to pay gratuity is only 6,500. Ma'am, it's good, right? It's good. It's a gain. If it's a gain, can I credit P&L account? No, ma'am. You have to credit to OCI 500. And for these now guys, I would have already made a obligation, a liability. So please reduce that liability. So what I'll do, DBO, defined benefit obligation, I will reduce my liability by 500 and I will book an income in my OCI. But if it's a reverse situation, instead of that, for 5 employees, for example, if I'm copying this, instead of 5 employees, if it's let's say 105 employees, if I have to make the payment for, if I have to make the payment for 105 employees, okay, it's not working, the reference, okay, no worries, cool, some references are there, I think it's not working, I can just cancel it, quit it, quit, okay, it happens if I'm copying up some figure which I'm writing it now, so it eventually happens that way. So it eventually happens at times with me, so just give me a minute. So basically if these things happens, what we are supposed to do, as I told you, if there are 100 employees, to them I have to pay, let's say, $700, but now only 95 employees, I have to make them the payment of $650. So when $50 is a gain, if it's a gain, I cannot credit P&L, no, because all this stuff is something which is right now you can feel, next year it can be changed also. Next year instead of 95 employees, it's only 80. So you can make that way until unless it is getting settled, okay. So that is known as change is to be booked in other comprehensive income. Okay, for example, I told I am having one employee who's, let's say, today, for example, I told him that he'll be getting an incremental of 10%. So maybe I have to pay him $50. So this is another example. Okay. In the next year or the year end, I understood that no, his increment is only 8%. So my liability will be just to pay 48. Ma'am, $2 is better, na? So what is $2, guys? What's $2? It's a gain. Yes, ma'am, it's a gain. But how, ma'am? Gain to be transferred into OCI, and not to P&L account. So this is known as the actuarial gains, because actuarial assumptions are going to change every year. It's going to change year by year till the time of settlement. But what if I say you, ma'am, there is a change. For example, it's known as past service cost. What's that, guys? For example, I told you the gratuity that you are going to pay. Let's say the gratuity that I am going to pay is, let's say, 2%. Is gratuity change every year? No. Gratuity is not something which goes on changing. No, it will not change eventually. So if gratuity is 2%, and if it's changed to, let's say, 5%, ma'am, it's a loss. Ma'am, you have to pay more. If this is a loss, guys, now this loss, because of which, if the gratuity was 2%, my liability was 700. If the gratuity is 5%, my liability is, let's say, 1000. So ma'am, there is a loss of $300. Can I put this loss in my OCI? Ma'am, no. Because when something which is constant, it's a plan. Gratuity is a plan. If there is any change in the plan, it is a concrete plan, because which the plans and all will never go on changing year on year. It will not change every year. It will not change. So like every year it will not change. So this loss is to be booked in P&L account. So this is because of some changes in the past service cost, which can be a resultant of two things. It can be change in the plans amendment, something has increased, or curtailment or cut short. For example, over here, instead of 2%, there was COVID, and the company thought, like, I don't want to pay gratuity, it's better in the current year. Now let's say we'll pay the gratuity, which initially my original plan was to pay gratuity at the rate of 2%. Now because of curtailment, some cut short, you are supposed to pay the gratuity of only 1.5%. Only 1.5%. So your liability was $700, and now it comes to $500. Ma'am, it's a gain of $200. Now this gain is something which is changed because of curtailment, a plan change. That plan change, we can put this gain into P&L account. Yes or no? I hope you guys are getting it. Yeah. So I think for the day today we have completed a lot of things, and I am planning up. Yeah. Okay, yeah, we can continue till the time. Yeah, just a minute. Yes. Okay. So cool. I'll be just taking up this way. For these now, students, we have a question. And for these we have good questions which I want us to do maybe in the upcoming class. So for the day we have just completed the concepts, which I just can wrap it up fast over here. So we have completed IFRS 16 for the day of the leases. You can check that if you have not visited, and IAS 19, some concepts, and for that some good questions I would want up to be done in the next class. So yeah, till then revise it, understand it, and students, yeah, if you guys have any doubts, please message me anytime, and feel free to message me obviously on the Telegram, on the Instagram, or maybe on the chat also. See, it's a revision, so yeah, everything and things cannot be done, but obviously I'll be taking up the important points for sure. And yeah, some good questions, like 2 or 3 questions from the ACCA resources, will be fortunately done in the upcoming session. So yeah, meanwhile, do take care, study well, and yeah, Seriously, when the exams are very near, please don't get panic. Drink a lot of water. And yeah, I'm pretty sure your preparations are going very well. So obviously, you guys are going to rock the things. So yeah, thank you so much. And if you have any doubts, do message me. Yeah, thank you. I'll be seeing you in the next class. Thank you. Bye bye.